All right, yo, what's up for everyone on the replay? I hope you were having a great day. We have a lot of interesting companies reporting earnings in a couple hours, in 4 hours exactly. We get Microsoft, Meta, ServiceNow, Waste Management, United Rentals, FICO, CHRW. We get a lot of great companies reporting earnings. So I kind of wanted to analyze a few of them, give you my predictions. We also get Tesla today, but I'm really bullish actually on Microsoft and Meta. I think Microsoft and Meta will probably go up 5 to 8%. And then I don't know about Tesla. Tesla, that one I think might go down, sadly. But I want to analyze a few of these companies. I also want to go over Amphenol, which reports earnings before tomorrow morning. And they're already at an all-time high today on some crazy Meta deals. So anyway, let me start with Microsoft right here. This is a great company, I think, to buy and never sell. This app is telling me, or this brokerage is saying there's some technical analysis right here, some bullish continuation wedge. I guess the rise probability is at 95% there. So the technicals don't matter when we're going into earnings, because if the earnings are just great or really bad, that is what's going to move Microsoft. And this is a great never sell name at a cheap valuation even right now. If you look on the right there, Microsoft is at a 29 forward PE. In my opinion, that is very fair. Every company in one way or another uses Microsoft, and they have a bunch of premium subscribers, 82.5 million Microsoft 365 subscribers. That's their software. Think Office, OneDrive, those kind of things. And check this out. This is that OneDrive software business. It does over 120 billion of annual revenue for Microsoft. That's insane there. And not just that business does over 100 billion a year, but also their cloud business. They have the second largest market share. Number one is AWS, then it's Microsoft Azure Cloud, then it's Google Cloud, then it's Oracle, but Microsoft's a huge player that also does over 100 bill of revenue. So they've converted from selling this hardware, these PCs that's kind of low margin, that's lower revenue than it was in 2022, to selling this crazy high margin software, and they just rose their prices for it as well. So I'm even more bullish on Microsoft. That's why I actually think Microsoft's going to beat on earnings, because they rose their prices so abruptly. They haven't rose the price of it in 15 years, and they just hiked it. So, and this is a company you just can't bet against. You just never sell this one. They easily make over 25, 28 billion of after-tax net income a quarter. Then they share that to you in a dividend. You get a 0.69% dividend yield. They do buybacks. They invest in the future, huge AI investments in OpenAI and Copilot. So anyway, Microsoft's one you can't bet against. And a 29 forward PE. That seems very fair in my opinion. Hey, what's up, Young Mar? He says HCA. Oh, I haven't even opened up my other apps right here. Let me pull this up real quick. Yeah, HCA is up 10% nearly today. They reported earnings this morning. We saw United Healthcare tank. So come on, Robinhood. Can we load here? There we go. So yeah, in our Roth IRA, it looks like it's slightly, oh, dang, look, we're having a little retrace right now. But yeah, they had phenomenal earnings this morning. I'd love to buy more HCA Healthcare. It's my largest holding in my Roth IRA. Looks like the market might be rotating a little down right now. Yeah, look at this. My main portfolio, or my dividend only account, we're down on the day right now. But no big deal. We're really waiting on Meta and Microsoft earnings, because that's what's going to move the market. So I don't care about any red that's happening today. I'm waiting for Microsoft and Meta. And let's get to this next stock that reports earnings today. In literally 4 hours, we're going to get earnings from Meta, and I'm super bullish on it. And I think analysts, they're up 10% on the week, because they're really pricing in how good these earnings are probably going to be. So I'm only up 26% all time, still pretty good on Meta. So yeah, they report, I think 10 minutes after Microsoft does. I think, again, I'm bullish on Microsoft and Meta. I think they're both going to go up 5% today. No, Meta, I believe, is today, right? Let me double check. Hopefully I'm not wrong about that. Oh, I am dumb. Okay, so that's actually, okay, I have been looking at the wrong day. So that's for Wednesday. So Wednesday is Microsoft, Meta, ServiceNow. Okay, so that's for tomorrow. I am slow, because today's the 27th. So yeah, I don't think we get anything today. Yeah, we already got our earnings for today. Dang it. Okay. Dang, United Healthcare is down 20% right now. That's not good. Someone said I got UNH at 249 today. Hey, 249? How's that even possible? But hey, nice one there. Okay, yeah, dang, they're down 19%. That's not great. That's probably why HCA Healthcare is falling. HCA Healthcare, I'm actually surprised they were up 10%, because HCA Healthcare said they're going to lose $500 million for the full year next year, because of the Medicare, Medicaid removal or the cuts there. So let's get to Meta real quick because they report earnings tomorrow. Still, I'm really bullish on them. So Meta's a really cheap company. What's up, Looney and Craig? What's APH doing? Yeah, APH is going insane. I'll get into them in a minute. They're up because Corning is up so much, GLW stock. But yeah, Meta right here, if you look on the right, they're very cheap. They're at a 22 forward PE. And why are we looking at the forward PE and not the current PE? Because they had a one-time adjustment to their EPS this quarter. It says they only made $1 of EPS, which was a total one-time adjustment, one-time tax adjustment. So this is the before tax number, and this is the after tax number. They had a literal one-time, never will happen again, like $15 billion tax charge. So anyway, this quarter, it actually was a record Q3. Excluding that one time, it was a record revenue, 50 billion in revenue, record profits, record cash flow. Yeah, so that's why we're looking at the forward PE. 22 forward PE is actually super cheap on Meta. One thing being questioned though on Meta is how much they're spending on AI and right now on like data centers and these NVIDIA chips because they're kind of losing in the LLM right now. Google Gemini is winning, ChatGPT is, but the Llama model isn't really doing as great. So they're plowing 20 bill, 25 bill a quarter. That's more than the net income they make. So they're spending more than they're making right now. For the first time ever, Meta has a net debt position, but I'm not scared at all. I'm actually glad they're spending this much. I'd prefer it. They actually just introduced ads to what's it called? Threads, check that out. Meta expands Threads ads globally as it surpasses 400 million users. That's nearly the same amount of users as X has, which is pretty crazy. They just created this app a couple years ago, Threads, and I love the app. I've been on it a few times, so I like it. But yeah, so that's Meta stock. And speaking of Amphenol, which does report tomorrow as well, Meta signs a $6 billion fiber optic cable deal with Corning. And that's ticker symbol GLW. They are up massive today. So they're like the number two high fiber optic cable provider. Yeah, check that out. They're up 17% on the day. They're at a 41 forward PE. And that great news sent up the number one player, Amphenol stock right here. I've been bullish on this stock for a long time. Wow. They're up 4.6% on the day. And we're about to get their earnings report tomorrow as well. They're cheap. Well, in my eyes, they're at a 38 forward PE. Actually, certainly wouldn't be buying it at this price. Definitely not like cheap enough to allocate to buy the stock yet. But the valuation, I feel like, could stretch up a little more. If we go to their previous numbers, they've been beating like crazy. They beat on revenue, they beat on EPS, and they beat on EBIT every quarter. And just to kind of, I can't express how impressive this is. This is why I own them. The revenue over here grew 53%. So the revenue's up 53, but the net income, the bottom line, is up 106. So what does that mean? That means there's margin expansion. Their net margin went from 15% to 20%. That 5% extra net margin just adds money to your bottom line. So they print net income and free cash flow. The free cash flow is like just as good. So that's how they're able to do these acquisitions. They're doing these crazy acquisitions. They're like top two customers are Google and NVIDIA. And it looks like Meta might potentially be a customer now. But yeah, Google's TPUs uses their copper cables. So does all the NVIDIA products. Okay, let's look at some of y'all stocks because I thought we reported earnings today. Yeah, GLW. Yeah, we could look at, you know what? That's the company that got the $6 billion deal with Meta. And that's sending Amphenol stock up as well. So yeah, check that out. Meta signed $6 billion fiber optic cable deal with Corning for AI data centers. So yeah, that's this business right here. They're optical communications. This is the main growth driver because all their other businesses are kind of not growing too much. Like look at this. Their second biggest business, display, is actually down 8% year over year. Then their specialty materials is up 13. That's good. Okay, so that's up 13. Automotive is up 5%. That one's up. So it's really the optic cables that's been leading to a lot of their growth, and it's just really improved their bottom line. So if we go to the revenue over here, just like Amphenol, the revenue's up 20%, but the net income is up by 95. So the margin expansion here is insane. Gross margins are up 11% after they grew 6%, after they grew 4%. Like they just keep growing their margins. They're able to raise prices as they get these, tech customers. So yeah, Corning, Amphenol, these are both they always move together. Today, obviously, they stretched up higher. But if we remove today, GLW and Amphenol stock nearly moved identical. Pretty cool. Here's your copper cable. What company? That was GLW and Amphenol, APH. All right. Yeah, you're right, Looney. What up, Rolando? He says, can we look at B? Hopefully, I can find this one for you. BMRRY. So we found this one. Cool. So it's an ADR. Can you check out Uber and SoFi? Yeah, for sure. And Caden will look at Lumen. What's the ticker symbol for Lumen again? Let me know. We'll find that one for you. So it's a small company here. This company's only worth $2.3 billion. So just beware that is a small market cap. So it's a British company. We'll convert the currency from British pounds to US dollars just to get a better idea. But that's a cheap valuation. An 8.4 forward PE, basically 8 times net income. What is this company's industry? General merchandise discount retailer, variety of non-grocery and grocery products. So interesting, like a maybe like a UK dollar store kind of stock here. But yeah, that's probably why they traded this low valuation. The dollar stores usually trade cheap, 8.4 times PE. But they report, obviously, they're British, so they don't report quarterly. They report in halves. But it looks like so far, these are negative year over year declines in their net income. So it's kind of starting to make sense why the stock has gone down so much. Probably because of this negative net income, if I had to guess. But maybe the risk to reward starting to look pretty good because the forward PE is so cheap on this company. But notice this: the current PE is a 6, and the forward PE is an 8. So that means the net income, the EPS, is supposed to decline. So but they're still not losing money. So it's a bit of a interesting one. They have Textron. Yeah, that's wait, they have the Textron. Wait, Amphenol just acquired a company called Textron. Is UNH at a good entry point? Yeah, United Healthcare fell 19%. I'm kind of avoiding this whole industry right here because it's kind of in the government's hands. Before they reported earnings, if I could pull up well, before they reported earnings, they fell because the government proposed no price increases. I wonder if that news just got buried because of their earnings report, but they fell 10% before their earnings report even came out. So, uh, okay. So yeah, look at this. The CMS proposes only a 0.09% increase in the Medicare rate. So that just is less money for United Healthcare. So so yeah, look at this. They missed on revenue. Ooh, so they were expected to make $1.70 of EPS, but they made no net income. Ooh, and that's real too, not just a one-time adjustment. So look at the basic earnings before interest taxes. They were expecting 3.3. They did 380. So this is a margin issue. So if we go to the revenue, it's great. This is the updated numbers. Oh no, it's not. So actually this is Q4. So this is the updated numbers right here, but it hasn't updated Q4 down here yet. Well, but what we've been seeing on United Healthcare is we can see the revenue looks great. The revenue's up 12% year over year. The revenue's up 12, but the net income is down by 59. And it really is down by 59. That's not some one-time adjustment. The operating profit really is. So that just is a margin crush. Net margins went from 6% to a 2.25. And in this quarter, which they just reported, the net margin was like a 0.4 or something. So I can see why they're down so much, and I'm kind of just avoiding UNH. I just don't love that industry, the insurance, and it's so in the government's hands. So I've actually been buying HCA Healthcare. They reported at the same time United Healthcare does, and they're actually they hit an all-time high today, but they're down a little bit, and they're falling because I think United Healthcare is falling so much. Like they would be up a lot more if United Healthcare wasn't falling, because they also said that they're going to lose $500 million next year in EBITDA because of the Medicare cut, or the non-increase. So that's something to watch. Yeah, that's tough on UNH there. I didn't realize the earnings were that bad. They really did miss bad on that net income number. Okay, let's see here. It's the Walmart of Europe, is what I hear. Oh, okay, that's interesting for that other UK stock. Biotech stocks Biotech stock PALI. Okay. We don't really cover these small market caps. Like if you look in the top right, they're only worth 269 million. So I just be careful with this one. And someone said, shouldn't UNH come up long term? It could. Warren Buffett actually bought United Healthcare last quarter. But it's just one I'm personally staying away from. Just the sentiment is so bad right now. But yeah, this company's only worth $269 million, this Palisade Bio, and they're a startup. So I just usually avoid these. If we go to the revenue right here, it says, it's zero because they've never sold anything. They've never sold a product or service. So they have no sales. So you're really waiting for like some sort of positive results, some sort of FDA approval. But let's see. The whole company's worth 269 million. Will they go bankrupt before then? Oh, they're actually not losing really that much money. 3 mil a quarter, which is still bad, but ooh, that's really bad when they only have 6 million of assets. Yeah, I can see why this stock is only worth 200 million and kind of at all-time lows. I'd be very, very careful. I'd try to, if I was in that one, I'd swing trade it. I certainly wouldn't just kind of trust that one as a buy and never sell stock. Hey, try not to spam in the chat there. We'll try and get to all these stocks. I said I'd get to Lumen first. Let's check out this one real quick. So Lumen Technologies, I remember this company was going bankrupt. They were at like $1 a share, but then they got, and I don't remember the exact news, but something like they got some $5 billion contract, electricity contract, and it just saved the company. So they went from $1 to like literally $7. They 7x'd overnight. And but their numbers are still bad. Like that revenue isn't coming soon, or I don't know when that's coming. But if we go to the revenue right now, I can see why this one's been a struggle. If we kind of zoom out, the revenue, the lifeblood of the company, the sales, the revenue's down 4%. And, it's negative every quarter. It's down 4% after it fell 11.5%. And that's after it fell another 17%. And that's after it fell 10%, after it fell 6%. I mean, you can't make this up after it fell 4%. So that's not great. And let's see, are they making money though? Are they still profitable? So no, that's not great. They're losing a couple hundred mil in net income a quarter. So that's why there's all this leverage right here. They now have a bit more. Yeah, a year ago they had more liabilities than assets. Now they have more, or they had more assets and liabilities. Now they have more liabilities and assets. So from a pure financial fundamental point of view, I don't like them, but there's a big sentiment shift right now in the stock price because of some new contract they got, which I don't really know. But for the financials looking right now so bad, and this debt, I'd be so careful. I'd probably keep the allocation this one low, but that doesn't mean the stock won't still do good. Like they're up 9% on the day. So congrats if you own them. But the financials do scare me here. Telecom services, optical communications, interesting there. All right. Hey, thanks again for that gift there, Alliance. That Rose says SILJ stock. Let's do this one. So it's an ETF, junior silver ETF. So it owns a bunch of the silver mining companies. Let's see. So yeah, Helka, AG, Coeur Mining, Wheaton. So yeah, a lot of the popular ones by market cap. Like yeah, their top holding Helka Mining is insane. So yeah, basically this ETF should just follow whatever the price of silver does. I wonder what the expense ratio is. The actual silver ETF, which you could also put on your watches, is just SLV. This is just the actual commodity of silver in an ETF. It's kind of fun to watch as well. But yeah, those are that's another nice way to maybe get exposure to silver with the higher yield, because those silver mining companies pay out dividends, and the ETF pays a yield, and maybe and SLV doesn't. Hey, what up, Sheldon and Larry? What's up? Unboxing. Hey, unboxing. Do you want me to look at Dave's stock? That could be a cool one here. I saw someone been saying Apple a bunch. Let me do Apple real quick. I appreciate you. And then we'll look at Dave and then GoDaddy. That one's being hurt kind of by AI. A lot of the software names are. So here's Apple right here. They're kind of being rewarded for not spending so much on AI. Meta is spending a lot, but not Apple. They're spending legit no money on these NVIDIA chips training their own LLM, which costs billions of dollars. So here's what I love about Apple. A lot of people are locked in the Apple ecosystem. They'll just have an iPhone for the rest of their life. So yeah, they sell this hardware, the iPhones, but the highest margin business, the best part about Apple, in my opinion, is the services business. So whenever you go buy something in the App Store, Clash of Clans, you want to go buy some gems, let's say you spend $10, Apple keeps 30% of the entire transaction just as a fee, I just call it a royalty, basically 100% margin royalty. They call it a developer fee just for being on the Apple App Store. So they take a 30% fee. So this business right here does over 110 billion of annual revenue for Apple. It's their highest margin business. Then they have more of the wearables, the Mac sales, the iPad revenue. Here's also why Apple's a bit affected by tariffs. 36% of the revenue comes from US, then 26% EU, China 16. So, but this is a phenomenal stock to just diamond hand. They really do print 25 billion of net income a quarter. And then what does Apple do with 25 bill a quarter because of real after-tax net income a quarter because they don't spend on AI? Well, they pay a dividend, and that dividend only cost 3.8 billion. So I feel like there's a lot of room for them to raise their dividend. It's a dividend growth stock. And since their dividend costs so little, the best part about Apple is their share buyback program. Number one share buyback program of any company on earth. They do $100 billion of share buybacks a year. That's their program right now. So I can't, that's why the stock just doesn't go down. They just buy back so much of their own stock. And that's why I like Apple. They don't force themselves to have a high dividend yield and high payout ratio. That way they can do the buybacks, which leads to stock price appreciation and invest in the future. I think they're partnering with, Apple partners with Google to enhance Siri for Gemini AI. They definitely need an upgrade to Siri, I will say. Apple faces rising memory cost. Yeah, I believe it. That's what Nintendo's been saying. That's why Nintendo has actually had such a massive drop, or one of the reasons right here. They're out here blaming it on a memory shortage. There's Nintendo stock with their Switches, Nintendo Switches. So anyway, let's look at some more here. Sorry if I'm missing some stocks here. There's so many I want to get to, and I apologize if I just can't get to all of them. GoDaddy right here. This is one of the software names. Check this out. They're at a new 52-week low today. I think Adobe's also very down today as well. So they're really cheap, though. If we look on the right, the forward PE, they legit trade at 15 times next year's net income. I mean, that's pretty insane. And they're beating on expectations. Like this quarter, they expected 1.23. They did 1.26. They beat on revenue. They beat on EPS every quarter, and they beat on EBIT. So it's not like they're falling because of they're missing on expectations. No, they're actually beating on every number every quarter, but it's just a sentiment around the whole industry. Like they sell like domain names, and maybe I think there's like the .shop, and like Shopify is kind of getting into the industry. So maybe there's more competition. But what we can see is that, the core business, that's up 8% after 3%. So actually the growth rate's growing over here. Yeah, it used to be like single digit, sometimes negative growth. Now that's back to 8% growth. And then the other half is their applications and commerce. Yeah, that's up 14% after 16%, after 10, after 15. So that's seen a nice little growth streak. And yeah, they really do make 200 million of after-tax net income a quarter. So they could potentially even be doing buybacks down here. Who knows? Yeah, dang, they got nice margins. So like they're already profitable, 15 forward PE. I think the risk reward does look pretty good on this one, but because the AI thesis, I just keep the allocation of this one low for now. I wouldn't buy too much of it. Like I wouldn't want that as a big size position. Ooh, I saw what was that? Trust the word says military stocks. Yeah. I really like Raytheon, RTX. They're expensive. This is like Collins Aerospace. This is my probably favorite aerospace and defense name. And a lot of these aerospace and defense names have been going up a bunch because of all the war fears. So if the geopolitical fears escalate again, this is a great hedge, or all the really military stocks are a great hedge. Like an HII is really cheap. I think HII is at like a 28 PE. They make like the submarines and the big ships for the U.S., only one like allowed to, or one of two. But yeah, Raytheon's a bit more expensive at a 36 forward PE, but I think they got like a bunch of new contracts, like Golden Dome contracts. They think they just rose their guidance. Raytheon secures a $380 million Tomahawk missile contract and C-130 parts. So, U.S. officials criticize Raytheon over contract delays, stock buybacks, and executive compensation. Well, hey, the stock's up and to the right, so shareholders are happy here. But yeah, they have some of the greatest brands like Raytheon and Collins Aerospace. I mean, there's reoccurring servicing revenue from Collins and Raytheon. I really like this name, and they print money, like real after tax, 1.7 to 2 billion of net income a quarter. You get a dividend, like you buy the stock even right now at current prices. Whenever the stock price goes up, the yield goes down. Even if you buy it now, you're getting 1.4% of your money back just in the dividend every year. Pretty cool. Wouldn't buy Raytheon here, but it's a nice hedge. I wish I owned some. I really don't own any really military, aerospace, or defense stock, except for like some, especially like Amphenol has a little bit of like 12% of the revenue comes from the military. So, hey, what up, Katrina? It's good to see you. Please remember to hit the like button. Hey, thanks, Steph. I appreciate you. All right. What's up? Apple earnings tonight. Is that true? Are Apple earnings tonight? Let me just double check. No, that's on Thursday. So Thursday we got Apple. Tomorrow's big. Microsoft, Meta, Tesla. That should be insane. Like ASML, then we get Apple, Visa, Master. We have so many great earnings names this week. Tomorrow, before the market opens, we get Amphenol earnings. They're already at an all-time high. I'm kind of worried what's going to happen. And hey, shout out to the homie Omar with the crazy ice cream cone gifts. He says Weeble stock. Let me actually check out Weeble because I actually just bought not much, like $30, but I bought 4 more shares of Weeble. They hit an all-time low, and even though they hit an all-time low today, even though they're down 50% from their IPO, they're still expensive, but they're so great, they're still worth owning in my opinion, but not as a meaningful size position. That's why they're my smallest position out of all the stocks in my portfolio. This is my smallest position, but it's still a position for me because I want exposure, because I'm more bullish on Webull than the analysts are. So if you're wondering what is Webull, ticker symbol bull right here, that is this app, this brokerage right here. Oop, hopefully you can't see my password there. Oh well. That is this app right here, publicly traded, and I've been using their app for many, many years, and I'm more bullish on them than the analysts are because they just added in prediction market stuff, and they make crazy. They make 2% on every transaction versus a 0.1% on a stock trading. So the prediction markets are 20x more valuable to their bottom line. And also crypto, where they keep it 0.5%. They added this says new next to it because it really is new. They added in crypto prediction markets advisory, like a subscription thing. They basically copied Robinhood's successful business model. And I'm just a shareholder. I'm so bullish on the picks and shovels play of fintechs like Robinhood, Coinbase, SoFi, Webull, Futu. They just collect these high margin royalties and interest income off their clients' assets and just, have insane margins. So Webull is one of the smaller plays, and I just bought 4 shares of them literally yesterday. I guess I can show you that down here. But I think Futu is another steal of a deal, and I just bought another share of this one too. At 161, it's at 163. Yeah, you can see on my little buy circles, my buy orders right there. That's every time I bought it. I'm even more. This is like Webull and Robinhood, but cheaper with more growth. It's crazy what Futu is, and Futu is actually this app right here, this brokerage, Moomoo, publicly traded. Funny enough, I own all these apps right here. I own Moomoo stock, I own Webull stock, and I own Robinhood stock. I own all of them because I'm just bullish on the whole fintech platform. I own SoFi. I own Dave. Okay, I'm kind of getting off track here. Can we look at Zeta? Ooh, hey, what do you think of buying Micron? Is it worth buying now or wait for the dip? So let me actually go to Micron because this one is so popular. And Isaac said Palantir. Hey, remind me to get to Palantir. And thanks again, Isaac, for those gifts there. Yeah, dang, Micron's at a new all-time high. I believe it. They're the memory shortage company. And check this out. AI-driven memory shortage demand creates global shortage, and it's expected to persist through 2027, benefiting Micron. It's just crazy. And because of this memory shortage, it's sending Nintendo down, sending Apple stock down a little. And NVIDIA just said they're raising prices on their GPUs because of the shortage. So anyway, here's the thing. You look at Micron stock on a technical point of view, they're certainly overbought on a technical point of view. But when we look at it on a forward PE basis, they're actually not that cheap. Current PE on the left, a 40 PE, that's expensive. But when we look at it on next year's net income, do a multiple on that, they're only trading at 10 times forward PE. And here's that numbers that they get that from. If we look at the EPS this quarter, it was $4.60. This was a record EPS. EPS is just net income, was $4.60. Never even been close to that before. Next quarter, it's supposed to go to $8 and then $9. So if you annualize that, that's basically $40 of EPS a year, and it's a $411 stock. That's how they get the 10.6 forward PE. That's why I think Micron, crazy enough, I wouldn't buy it today, really. Certainly not with anything meaningful, but maybe the smallest buy. But I think it could stretch up another 20 to maybe 30% even from right now's price. And it wouldn't even be crazy overvalued at a 13 forward PE. That's kind of my thesis on there. Hopefully that kind of makes sense. Let me do Palantir because I saw that one too. These are some popular ones. I like going over these. Hey, what up, Narc and Rashad? What's up, AutoZone? AutoZone's done crazy good. And Elo, good to see you. IoT, we'll look at IoT for sure. For sure, we'll get to IoT. And Reddit, I don't know if Reddit reported earnings. We'll check out Reddit. They did fall today. So here's Palantir. I'd love to own Palantir stock, but they're just way too expensive. Let's see if there's any news here. Strategic partnership with Hyundai, multi-year deal worth hundreds of millions. Palantir dismisses AI bubble concerns, emphasizes need for effective implementation, and that's Palantir. They're the actual company that where you use your data for practical good use. So Palantir, a lot of the revenue comes from the government, the military, the Air Force, police stations. That grew 55% year over year. After grew 33, after grew 12. So no wonder there's so much hype around Palantir stock right now. This is incredible growth from the government. So it's also kind of a aerospace and defense hedge a little bit. But also the commercial side of business with other S&P 500 companies like Google. This revenue, the commercial side, this is the unbelievable growth. Uh-oh. Yeah, there we go. Sorry, it lagged. It's up 73% year over year. I can't describe how impressive that is. Like, it's only green in the middle. It's only green year over year numbers. So, and they're beating on every, the orange lines, what the analysts expect every quarter. They beat on expectations. They have no debt. This is a fortress balance sheet, no debt at all. $7 billion of cash earning interest. Every time they make net income, they just retain it and add it to their cash pile. So, Palantir is insane. I'd love to own them, but I should have went over that. They're stupid expensive, like 101 times sales. So not like a forward PE, but like price to sales is 101. And the forward PE is a 216. So they're having their 40% growth year, but they're just not where I want to buy them yet. Hey Nick, what's up, man? I want to get to B Mills. Remind me to get to Zeta, man. I know. I'm sorry if I'm behind here. I saw this one. IoT Samsara. Oh wow, they're actually at like this 52-week low level. That's odd. I actually don't remember what this company does. Let's see if we can figure it out. So most of the revenue comes from the USA. So they do internet connected sensor systems, plug and play sensors, wireless connectivity. So maybe it's like a commodity. I don't know. So the numbers they've been reporting are great. They beat on revenue, beat on EPS, beat on EBIT by a lot. Like they're beating on every metric by a lot. They're for the first time ever profitable. They made net income this quarter. Yeah, they really did make net income. That's crazy. So they're losing no more. There is no forward PE, or there probably is, but it's super. Yeah, so there's no forward PE. That's because they just this quarter got EPS positive, net income positive. So you really got to wait a couple years for this one. What's the market cap here? 17 billion. So I don't know how to value this one. Maybe it's appropriately valued at 17 billion, but I like what I see here. Every number's headed in the right direction, beating on every analyst expectation. So I don't know why they're falling. That's maybe one to look into. J&J when you get the chance. Yes. Remind me to get to J&J as well. So here's Zeta Global. This is like another software name. I remember hearing something like this most recent quarter, they got like 50 new customers who pay like 100K of revenue a year or more in ARR. So the revenue growth has been great. Revenue's up 25%, after grew 42%, after grew 25%. So they're on a streak of revenue growth. And it's another one of those software names that are just now getting net income positive. So it's kind of tough to give a exact valuation on this one. But as we can see, these year-over-year green numbers, how they're narrowing their losses, that's just so impressive. I can't believe it. So, I mean, the margins are growing as well. So, yeah, Zeta, what's the market cap here? 4.9 billion. That's the same as Webull. Maybe still slightly pricey at current prices, but I love everything I'm seeing over there as well. Let me do Johnson & Johnson because this one is really benefiting from their oncology division. This is like the most boring blue chip of all blue chips to ever exist, but it's been a great performer this past year specifically now that they're kind of getting out of the lawsuit stuff. Johnson & Johnson projects $21 billion of free cash flow and higher second half EPS growth in 2026. Well, that's great. Let's go see here. Yeah, and that's the crazy thing. Johnson & Johnson isn't like crazy expensive, even at all-time highs. They're at a 23 forward PE. So, I mean, that's not like crazy expensive. And if you buy the stock, even right now at all-time highs, you get a 2.3% dividend. They're actually a dividend king, which means they've never had to cut their dividend for over 50 years. They've risen it every single year for 50 years, never had to cut it once during 2008 or 2020. So, yeah, the EPS projections are supposed to go to $2.60. That's crazy. Wow. Yeah, I think they can pay off like all their debt with like 2 years of free cash flow. Yeah, they make five. Well, let's see exactly the numbers. Yeah, they make 5 billion. Yeah, so this was their one-time adjustment. They didn't actually make 11 billion that quarter, but they really did make 5 billion. So this company's making 5 billion in net income a quarter. Pretty insane, and even more in free cash flow, I believe. Yeah, dang. Yeah, Johnson Johnson, it's a tough buy today, but if I was a shareholder, I would not be selling. They're really benefiting from their Shockwave acquisition. That's actually a stock I used to own. Let's see if I can find their old ticker symbol. Shockwave, SWAV. Dude, Johnson and Johnson got a steal of a deal on this stock right here, and it's now accretive to their EPS. Anyway, they're an oncology play now, and they're doing great. They were so smart to spin off that Kenvue. J&J also got a better credit rating than the US government. Wow, really, Luffy? That's insane. That's pretty cool. Hey, stocks, crypto says, I love watching you break it down. Hey, I appreciate that, man. So Jim says, what happened to Reddit stock? I do own this one. I don't think, yeah, they didn't report earnings today. Reddit enforces trademark control over Wall Street Bets community event. Okay, I don't know what that means. But anyway, yeah, Reddit's down 8% on the day. They're just really expensive, so I'm not shocked. I'm actually a believer that Reddit's going to get added into the S&P 500 this year. I think they're the largest US name by market cap that's not in the S&P 500 yet. They report such great numbers. They beat on revenue, they beat on EPS, and they beat on EBIT. Like EBIT specifically, like they expected 85 mil, they did 140 mil. Like the earnings were actually incredible. Like this is not some meme stock. A lot of people think Reddit's a meme stock, but they really have phenomenal growth. Revenue's up 68%, after grew 68%, after grew 21%. Incredible top line growth. And not just top line growth, but profitability. They're already profitable with really good margins. They made 162 mil of after tax net income. And a nice cherry on top is their fortress balance sheet with no debt at all, completely debt free, so much net cash. I think like $15 of their stock is just their net cash. So, and the free cash flow is just as insane. They're actually getting revenue from LLMs right now, licensing out their data to train LLMs to like Google and OpenAI. So they're getting some really high margin licensing revenue. Reddit has legit, it takes like nothing to run this company. Let me show you these margins. Reddit has 91% gross margins. Just insane. And I am a shareholder of Reddit, full disclosure. We are up a bit on them. Well, we're down on the day on them. Let's see if we can find this. Yeah, UiPath is down. So a lot of software names are. Reddit's probably just down because a lot of software names are down. Like UiPath is down 5. Dave is down 6. Dave is, whoa. That's a new 52-week low on Dave then. Dang, they're starting to look very attractive at a 14 PE. Please don't tell me I unplugged my mic. Okay, good. I did not. Okay. I'm a little behind here. My bad here. Sheldon said AXP. Oh my gosh, we got to look at Axon. Yo, Nick, Axon's really great. They're just really expensive. I want to get to them. Remind me. So, AXP. Yeah, American Express is a main holding of Buffett. If we go to Buffett's portfolio, a lot of people know him. His largest holding is Apple. You know, it's 19% of his portfolio. But right under that, 18% of his portfolio is American Express. This one has been struggling with kind of the new. It's not in effect yet, but they propose a 10% credit card interest rate cap threatens American Express and industry. You know, J.P. Morgan, Jamie Dimon CEO is like coming out and like defending it'll hurt the U.S. economy if they do the 10% interest rate cap. Anyway, that's one piece of news to kind of keep up with on American Express, but this is a great company. You know, Buffett's a huge shareholder at a fair valuation, you know, on the right. They have a 21 forward PE, so that's pretty fair. They could probably stretch up to like, you know, where it is now. Like the forward PE could go to a 24 pretty easily. So if we go to their bottom line, this is crazy. They easily make 2.5 to 2.9 billion of real after-tax net income a quarter. And then what is American Express doing with, you know, basically 3 billion in net income a quarter? Well, they pay a dividend, and that dividend only cost 580 million. So the best part is the share buybacks. They spend at the top here literally $1 to $2.5 billion a quarter on share buybacks. It's pretty insane. So the net income grew 15%, but the net income per share, you know, the EPS growth rate and the net income growth rate should always be the exact same. The net income grew by 15.8. The net income, okay, that's why it was glitching. Wasn't in quarterly. But the EPS grew by 18. It grew 3% more than the net income because they bought back 3% of the shares and you get the 0.65% dividend. So I actually just love American Express. Great holding a Buffett at a fair 21 forward PE. If you buy them, you probably should get like S&P 500 type returns. So let's do Axon real quickly. That's not the right ticker. This is your body camera and taser place. So the whole UK police force, a lot of US police stations are now enforcing body cameras and cameras in the car. And Axon is to the benefit of that. So they are the number one body camera provider for police stations. And they also sell the cloud on top of that. So every time these cameras take their footage every day, it uploads it to the cloud. And so they have two businesses there. They're also the number one drone defense play. I think that exists. They have the best drone prevention products out there. Like so many police stations use it. Royal families use it to keep drones out of their properties and stuff. Like it's pretty insane, their products. So anyway, the bad part is why I can't buy them is because they really are struggling with profitability. They've actually made no money for the past 4 quarters in a row. The core business has actually lost net income every quarter for 4 quarters. So that's something that's, not great. So, yeah, that's the one thing preventing me from Axon because they're a great business, but the profits just aren't there and they're crazy expensive. Remco says AYI. I don't think I've heard of this company ever. So this is Accruity. So if you're wondering why did the stock just gap down right here, it was on earnings report. So let's go see what they reported and see if we can figure out why they fell. So they slightly missed on revenue, they beat on net income, and they beat on EBIT. So it really wasn't that bad of an earnings report. Accruity brands lighting. So the growth is slow here, it looks like, if we go to their total. Oh, well, then it's their other business that's kicking it up. Let's see here. Whoa. So look at this. I was looking at only this. Their core business, is only up 1% year over year. Like if you look in the middle, it's all low single digit growth rates, sometimes negative growth. So that's low single digit growth rate. But when we go to their other business right here, Intelligent Spaces, AIS business, this is the metric to pay attention to. It's up 250% year over year. So that's pretty insane. So that when we combine the total businesses, the total revenue's up 20%, and they made 120 million net income. That was a record net income. Yeah, it's never been above 120 million before. So record net income. Did they do an acquisition? So that might be why the revenue grew up so much. So a year ago they spent $1 billion buying a company. If this number is negative, that means they bought an asset. If this was positive, that means they're actively selling out of their assets, which you really don't want to see. You really always want to see the cash from investing activities negative. So that might be why the growth on that one business was so high, because they bought a company for $1.2 billion. Pretty interesting. Yeah, hey, we already looked at Microsoft. I definitely want to get to them again because they report earnings tomorrow. With APH being at all-time high, do you still think it's worth buying more at this price? Not real. They report earnings tomorrow morning. So we'll find out tomorrow morning. So I wouldn't buy today because we get earnings tomorrow. I think Reddit is down because France and UK banned social media. Oh, wow. Okay, Jim, that's interesting. I didn't know that. I wonder how Meta's reacting to that news. Yeah, that's not great for. Yeah, APH, I do maybe the slightest dollar cost average, but wouldn't really buy it right here. Wookie, what's up, man? Hello. Yeah, I was buying, where was this? A lot of my stocks are close to all-time highs today. I've missed this dip right here, when it fell to, I didn't feel great. I bought it at 136, bought it at 129, but just had a great rally this past 2 weeks. Same with Corning. All right. Marvel Technology. The rumor is they're building the new TPU for Microsoft. Whoa, I heard that. There's a new Microsoft chip out there. I did hear about that. Let's see if we can find any news down here. Let's see. JP Morgan names Marvel Technology top semiconductor pick. Marvel receives FTC approval for $3.2 billion Celestial AI acquisition. Whoa, we used to analyze that stock a lot. Or or that was maybe Celestica. Who knows? Anyway, they're buying a company for $3 billion, and the whole company's worth 70 billion. So interesting there. Yeah, look at the expectations. The revenue's up and to the right. So the revenue is going to go from 1.89 to 2.28. So that's great. And the EBIT as well. The earnings before interest is going to go from 650 to 800 mil. So that's great. They're finally profitable. Like if we zoom out to their net income, to last year, every quarter for the past couple of years, they were losing, a couple hundred mil of net income a quarter. It's a tough buy. But now they're actually making a couple hundred mil of net income every quarter. They had a one-time adjustment this quarter, but they really did make their normal like 400 mil. So it looks like they did sell out of an asset. I don't know exactly what that was, but they sold something for $2.4 billion, and they paid off some debt with that. Huh. Or maybe they did share buybacks. Maybe that's what that big negative number here was. Well, let's just go figure it out. So it was a buyback. They did 1.3 billion a share buybacks, and actually 2 billion for the whole year. They bought back 2 billion of a $70 billion stock. So yeah, that is like 3.5% of the company they bought in share buybacks, and you're going to get another 20% growth. That's good. They're expensive though. I think MRVL on a forward PE though, 52 forward PE. Yeah. That's the one thing you got to be careful with. So not a steal of a deal, probably at current prices. So let's do Microsoft now. Someone's been saying that one. So Microsoft, I really like. I guess there's a little technical analysis form in here. Bullish continuation wedge. Their rise probabilities at 95% chance according to technicals. But what's cool about Microsoft is they report earnings tomorrow. I think they're going to go up 5%. Nothing great, not double digits, but probably 5 to 7%, after all the dust settles. They're at a forward PE of a 29. I mean, that's just so fair in my opinion. It was especially a steal of a deal a couple days ago, and that's when I made a video about them, $450. But even at current prices, like I wouldn't call anyone crazy to buy Microsoft at this current price, at this valuation. So they're a huge software play. They've been getting hurt with a lot of the software stocks too. But they're, Office 365, OneDrive products, PowerPoint, that does over 120 billion of annual revenue for them, and is high margin software revenue. Then they have their cloud business, big cloud play, second largest market share. That does over 100 billion a year as well. And they beat on every metric every quarter. Pretty insane. And they do 25 to 27 billion of after-tax net income a quarter. And then they just, invest in the future. They train their own LLMs. They buy businesses, they buy part of OpenAI, they buy part of Anthropic. So they make their own TPU now. They're making their own chips. So yeah, look at that. Microsoft unveils Maya 200 AI chip. Microsoft selects SK as exclusive memory supplier for the chip. Microsoft-backed OpenAI launches enterprise AI amid competition. Microsoft secures approval for 13 billion data center expansion in Wisconsin. Yeah, they're doing like a bunch of data centers here, 15 additional data centers. Wow. And that should benefit all the infrastructure. Like it should just trickle down, from Amphenol to Constellation Energy to Comfort Systems to Powell Industries. I love buying the whole ecosystem because they all benefit each other. Yeah, we're still slightly negative on the day. Let me check the SPY real quick. Yeah, SPY's up 0.42. SoFi's a little red, Robinhood's red. So it's kind of like a mixed day here. Our main portfolio's down. Our Roth IRA is green on the day because of our only stock in here green, HCA Healthcare. They reported earnings this morning. They were really good. I haven't even done a portfolio update this stream. I need to do that. And hey, what's up? S. Lopez, thoughts on Tesla versus Taiwan Semiconductor? Yo, Taiwan Semiconductor, I'd way, way, way rather buy than Tesla. Have you ever heard of BAB? Let's check it out, Joshua. BW stock. Let me do this one for you. Hey, Milgon, he says UFG. We'll do UFG stock for sure. Time to start taking profits on gold and silver soon. Yeah, gold and silver. I certainly wouldn't be buying gold or silver at current prices, but yeah, maybe to trim a little. I don't think anyone would call you crazy. Certainly don't sell at all. So here's, I don't want to say that name, but BW stock. They're worth $1 billion. What industry are they in? Thermal segment. So specialty industrial machinery, renewable circulation economy, divert waste from landfills used for power generation to replace fossil fuels. So, here's kind of their website right here. Let's go look at their numbers. So they're only worth $1 billion. Are they profitable? So the revenue trend is not great. So the revenue's down year over year, 2%, and that's after fell 36%. Well, it's kind of choppy. Like sometimes they make a bunch, but look at that leverage. That's not great. They have more liabilities than they have assets. And so they are actually technically they're making a couple million in net income a quarter. So the core business actually does make net income every quarter. But but they're having some weird adjustments to their actual bottom line. I don't know. I don't know about this one. They sold off an asset this quarter. Maybe that's why they had this $35 million net income boost. I wish I'd give you more thoughts on them. Kind of missing on expectations. So yeah, yeah, I'd be super careful with that one. The stock's done phenomenal. I mean, maybe there's some news I'm missing here, like maybe they got some contract or something, but the stock's been up and to the right. Huh. It's like a niche thermal player. I don't know. Interesting there. So, um, can you show us an ETF or an ETF? Yeah, we look at ETFs as well, like the VOO or any ETF. We can look at that too if you have one. UFG stock. So Unifuels. So we kind of avoid these ones. If you look in the top right, the market cap, they're only worth $40 million. So hey, Mr. Gurdon, we'll get to Amphenol. Hey, we already looked at them. They're having a great day because of Corning. But yeah, Unifuels, they're only worth $40 million. You just got to be so careful with that market cap. I mean, that's just so tiny. Um, are they even a US company? Where are they headquartered? So they're a Chinese company headquartered in Singapore. So it's a Chinese $40 million market cap. I mean, the numbers don't look bad, but I mean, 90,000 of net income for the past 6 months. I mean, that's not any net income. Yeah, I can see why this stock has kind of done bad. I'd be so careful with UFG. I don't even know if that's the stock you were talking about, but I'd be real careful there. Um, what do you think of Berkshire Hathaway? Can we slide before we get Buffett? So let's look at Berkshire Hathaway, then we'll get to Amphenol stock. So Berkshire Hathaway, this is like an S&P 500 alternative. They just own a bunch of assets, and they've outperformed the S&P. They've CAGR'd at a little bit more, but the S&P 500, Berkshire Hathaway, I think these are both great ways to like just invest in a safe asset that'll probably return you, in my opinion, 7 to 10% of your money back a year on average. They own so many businesses wholly, and they own a bunch of stakes in the companies. Like, yeah, they have a stake in Coca-Cola and Apple and stuff, but they wholly own a few businesses like of Geico. If you heard of Geico, they completely own Geico. They own the Pilot gas stations. They own Dairy Queen. They own so many different brands. Or here, BNSF Railroad. I love that business. So anyway, yeah, Berkshire Hathaway, they don't do dividends. They instead do it all on share buybacks and buying companies. So it's Warren Buffett's company, Berkshire Hathaway. So let me do APH right here. APH, this is the copper cable fiber optics provider for a lot of popular companies. Like Google's TPUs uses Amphenol. NVIDIA's products like NVIDIA NVLink Spine products uses Amphenol's copper cable and high fiber optic cable solutions. So they are expensive, but they're at an all-time high today. And that's because of Corning, GLW. They're up like 16% also to a new all-time high on some new data center news. But these numbers are just so impressive. This is what you want to see and trust. The revenue's up 53% and the net income is up by 106%. So that means their margins are up and to the right. Record 20% net margin. It's never been 20% before. Record gross margin. Like everything is headed in the right direction because of the data center demand, and they can charge more. And they've been beating on every expectation. That's the orange line here. They beat on revenue, beat on EPS, beat on EBIT. And in the past couple weeks here specifically, they've been doing some acquisitions. Like they bought 25% of ATC India. That stock's up like 600% in the past 5 years. And I thought that was really interesting. They acquired CommScope's best business right here. Ticker symbol COMM right here. Sold off this business right here. The one we're looking at, 68% of the revenue. Their connectivity and cable solutions. which they bought it last quarter. In this quarter specifically, they had this crazy growth to it. So Amphenol, in my opinion, this acquisition is going to be even more accretive to the EPS. And this one's also the profits. The margin expansion here is crazy. Revenue's up 50, profits are up by 203%. Amphenol, they're a serial acquirer. They're worth like $200 billion now. Yeah, $198 billion. I wouldn't buy it today. They report earnings tomorrow morning. So by the time we wake up tomorrow, their numbers will be out. And I can't wait to see what happens. So I'm a shareholder here. I would not be trimming or selling a single share. Even if I'm never allowed to sell the stock, but even if I was allowed to, I would not be trimming or selling. I mean, Amphenol is so good of a company. I can't believe how good this portfolio is doing. We're actually at an all-time high today in this portfolio. I can't believe it, but somehow we're up 16% year to date. The past year is even more insane. Let me pull, if for anyone that cares. I mean, we're up 105%. This is my portfolio specifically, where once you buy a stock in here, I'm never allowed to sell it. And that's why we're doing so good, because most people, on Amphenol, if they bought it down here, they probably would have trimmed it a little, or at least sold a little. But because we didn't, or in this stock as well, Comfort Systems, or even Powell Industries is also at all-time high right now. Maybe they would have trimmed it a little, but certainly not my other portfolios. Like this portfolio, year to date, I think we're up 1.6%. Okay. What about copper? Yeah, actually, I don't know what the ticker symbol for copper is, but Amphenol is a huge copper commodity play. They just have so much copper cable just sitting around. Like Amphenol is a big copper beneficiary if the commodity keeps going up. So Reddit Bible on today's dip, very slightly. Reddit, it's worth buying a little bit of. Not going crazy, but I certainly think Reddit's worth nibbling on. Oh my goodness, they think I'm AFK. Okay, here. All right. Sorry if the stream ended for a second. We're back. They made me fill out a CAPTCHA. But yeah, Reddit, I think is a great stock. I think they're going to get added into the S&P 500 this year. I think they have to do a stock split to do it. So if you see them announce a stock split, that means they're for sure getting added into the S&P 500 this year. So Reddit's a $300 stock. But as much as I believe that and trust that, I don't have that much money in Reddit. And a lot of these names, like there's so many stocks out there that I love and I think they're doubles, triples, whatever, but I just can't trust that much money in them. Like a SoFi, a Robinhood, a PSIX. I love this one. I think they're going to do great, but you keep them in small positions. A Reddit is another one that I only put $380 in Reddit. They've just done so good. I'm up 100% on them, so I'm really still not going to buy any. But on a technical point of view, it actually, it almost looks perfect on a technical setup for them to bounce on this dip here. But who knows? Ooh, we also get CHRW reporting earnings tomorrow on Microsoft. I bought the stock the day they hit an all-time high, then they just continue to go higher. I never mind buying stocks on all-time highs. Like I bought Cavco, Powell Industries, on a lot of these stocks, like on days they hit all-time highs, but I don't mind it if they're quality. That's an autonomous kind of trucking AI play. Let's see. What should we look at next? Oh, pilot truck stops? Yeah, that's what Berkshire Hathaway does own. Oh, there's so many good stocks here. I don't know which one to get at here. Serve Robotics. So this is a robotics play. I'll show you my more favorite robotics play after this. I'd be careful with this one. I think they have like a big contract with like DoorDash. Serve Robotics acquires Diligent Robotics for $30 million, and that puts them in the healthcare sector. So that's interesting. I like that they're acquiring companies, because they kind of have been issuing shares, diluting the shareholders to get cash so that they can acquire companies, which I think is genius of them. Because right now they really don't have any revenue. You're buying them right as they're basically a startup. I mean, they're having their first ever sort of revenue. I mean, this quarter the revenue was $680,000. So yeah, it's up 200%, but the revenue is $600,000, and they lost, $33 million net income on that. But if you're wondering, how is their assets on their balance sheet? How is their assets going up when they're losing money and have no revenue? Well, it's all because of the stock price. Dang, they diluted you by 6.5% this quarter, then another 1%, 8%, 8%, 3%. they're diluting you by a lot. So you own like 20, 30% less of the company than you did a year ago. But I think it was smart. That's why the stock can never sustain a rally, because they just dilute you. And that's the smart thing of them to do, because the stock is overvalued. But that's how they can now like afford these losses and do these acquisitions, because this company's showing on $210 million of cash and no debt. And think about that, $210 million of cash, no debt. The whole company is worth $940 million. So 20% of the market cap is just cash. But again, they diluted all shareholders by 20% to fortify their balance sheet like that. So it's a tough one. Guess they're expected to have $3 million revenue in 2 quarters. That's good, maybe from that acquisition. But I'd really, really be so careful with that one. Same with like a Rich Tech Robotics. My favorite robotics play is actually an SYM, a Symbotic, or a pure robotics play. They're also kind of on a dip if you're looking for one to buy on a dip. So Symbiotic has over 1,500 registered IP and patents, and they have real revenue. You know, Rich Tech Robotics, Serve, they really have no revenue. This one has 500 to 600 mil of revenue a quarter, and it grows very nicely. Their largest customer is actually Walmart, and Walmart loves them so much that Walmart decided to buy 12% of the company. So Walmart owns 12% of all the shares here. Their number one customer is Walmart. They help them out with their warehouse logistics, with these warehouse robotics. It's pretty insane. You know, they have about Albertsons, or the other grocery stores with these. Oh, should I play the video? Oh, it's going to be real loud though. Oh, no, let me not do it. I think they have pictures down here. But anyway, they really do have these, kind of like an Amazon. You know, Amazon would be my favorite robotics play, but it's obviously not a pure robotics play. This one's like a pure one. So there you go. Hopefully that was kind of helpful there. Oh yeah, I said I get to Taiwan Semiconductor versus Tesla. Let me get to Taiwan Semi here. And Suzuki, man, what's up, dude? Yeah, my phone battery, it's all right. We're on 23%. We're chilling. So, what about Meta and ABAT, TCOM? We'll check that one out. Someone bought GLW yesterday, and now they're up 17%. Yo, you got the insider knowledge there. Um, so Taiwan Semiconductor, they're also nearly at an all-time high. And even though the stock is at an all-time high, if I was a shareholder, I would absolutely not be trimming and I would not be selling, because I think they're going to go up another 20, 30%. I mean, check out this forward PE on the right here. It's a 24. Like, I feel like this could stretch up to like a 27, 28 forward PE before it really starts to get crazy overvalued. And that would send this up another crazy percent. NVIDIA is now their top customer. NVIDIA surpasses Apple as Taiwan Semiconductor's largest customer, accounting for 13% of revenue. So yeah, Apple makes their, or they design the chips. They're all manufactured at Taiwan Semiconductor, and all of NVIDIA's chips, or most of them now, a little bit moving to the US fabs, but are also manufactured in Taiwan by Taiwan Semiconductor. So NVIDIA designs the chips, Taiwan Semi makes them, and they have the craziest market share for these wafer chips, 71% market share, and the pricing power is insane. They've been raising prices. The revenue is up 26% year over year, so the revenue's up 26, but the net income, the bottom line, is up 72%. That means the margins are growing. The margins were already insane at a 40% margin, but the net margin went from 42 to 56. That margin expansion is beyond belief impressive. Like, they literally, and this is in US dollars. We've converted it because they're a Taiwan company. We've converted it to US dollars. Like, they really made 19 billion to 14 billion of after-tax net income a quarter. And it's kind of like you get an exposure to NVIDIA with a higher yield. Basically getting near 1% dividend yield on Taiwan Semi. So that forward PE of a 24 really implies that this could stretch up higher, I think. They're not crazy overvalued. Same with kind of like Micron. Like, that's why we're not in a crazy like bubble. Microsoft's cheap, Meta's cheap, Nvidia's kind of cheap. What was this one here? TCOM. I said I get to that one. Trip.com. It's a Chinese ADR, I believe. So they're a Chinese company, so we'll convert the currency to US dollars just to understand it better. So they are profitable. Whoa, is that real? So that wasn't real. They didn't actually make 2.8 billion, but all the other quarters, like, they really do make on average like 4 to 600 million of after-tax net income a quarter. That really is good. Trip.com. And you get a small dividend yield here, small yield. Maybe we can check out their website. Oh, it's a Chinese site, so we won't be able to view it. But yeah, headquartered in Singapore. So yeah, provides accommodations for airline tickets, tours, corporate travel, property management, advertising services. So when we just judge them off their financials, it's great. Like, they really do make great net income every quarter. They're cheap at a 12 times forward net income. They had a one-time adjustment this quarter, so they're not actually at a 9 PE, but a 12 PE, not too bad. But they are Chinese, so they always kind of just like trade low multiples. Trade at low multiples. Ooh, what up? It's gonna be silent on Ripple. Hey, what up, Crypto Garage? Zhang said SoFi. Hey, let's do SoFi. And Skagnet, what up, dude? Long time no see. Hope you're well. Yo, you too, dude. Hope we're doing good. So, yeah. Oh, yeah. By the way, if y'all wanted the follow button, we stream every day. So here's SoFi right here. I do own SoFi stock. A little bit in my Weeble portfolio. Here's the metric to watch because SoFi reports earnings on Friday. So in a couple of days, we get SoFi earnings. The metric I'm watching and what's led to all the stock price appreciation on SoFi right here, it's not just momentum. It's actually them growing their fundamentals in this metric right here. If you go to their financial services business, this has the most impressive growth I've ever seen. If it'll load. There we go. It's up 76% year over year. After grew 101%, after grew 141, after grew 280, after grew 289. Like it just hits a new record every year, every quarter. Like I can't explain how impressive this is in the middle here. Just super positive growth. And all their businesses are growing this way as well. Like their main lending business hit a record 25% year over year growth to 500 mil for the first time ever. So they just like beat on expectations. Like no analyst expected that sort of growth. So they beat on revenue, beat on EPS, beat on EBIT. Like they triple beat every quarter. And that's why I think people are really starting to take SoFi serious. They really do make a couple, like 100 mil plus in net income a quarter. They have that insane top line growth. They have been doing a little bit of share dilution, but that's just what SoFi does. They always issue shares to raise cash and they just loan out that money. So yeah. Oh yeah, JP Morgan owns a 5.1% stake in SoFi Technologies. Deutsche Bank projects SoFi 2026 EPS to exceed consensus. Hey, I agree with that. So yeah, if we look at the shareholders down here, JP Morgan owns 4.22%. Maybe it's 5.1% now. So JP Morgan's like, hey, let's not get out innovated by SoFi. Let's just buy SoFi stock. Let's see. I've had GLWs since 2022. I'm up over 100%. Nice. Very nice. Yeah, GLW went insane. Yeah, it's kind of a mixed bag today. We go to the top stocks here. Cloudflare's up a bunch. Corning's up the most, but there's a lot of down names like United Healthcare. Dang, UNH is down 20. CVS, same Medicare Medicaid program, and ELV, they're all down on the Medicare Medicaid cut. SANM's down 20. Yeah, look, so it's not just kind of Reddit. Pinterest is down 10. Reddit's down. Dave's down 7, Instacart's down 7, Life360, Trade Desk. Dang, that's got to be a new 52-week low on Trade Desk. Yikes. So some of the software names are still getting hit. Yeah, it's kind of tough to buy SoFi now because you're kind of betting on earnings, but it's a great one to buy, never sell. And I'm not too happy about buying SoFi at current prices because SoFi does look quite expensive. Moderna, hey, I think this one's like, this is your vaccine play. Is it mRNA? Yeah, so I think they're trying to diversify away from selling COVID vaccines. You know what? Let me cover this first, actually. So yeah, right now, 95% of the revenue is COVID vaccines, and the sales of this one have just been down bad. So if we just go to their total revenue right here, look at these year-over-year declines. It's down 45%. Last quarter's down 41, down 35. That's after, it fell 29, 91, 44, 45. So they're just seeing, obviously, COVID was when they made a boatload of money, $5-7 billion of revenue a quarter. But now it's like, it's really fallen. And not just the sales, but the profits. This is the really scary part. They're losing a ton of net income right now. A lot of money. But they're trying to diversify now away from vaccines. And let's see. Moderna and Merck report 49% risk reduction in melanoma recurrence with mRNA vaccine in 5-year phase. So maybe, I don't know. Moderna halts new late-stage vaccine trial investments due to U.S. regulatory challenges. So anyway, it's a healthcare vaccine play that's trying to diversify away from selling vaccines because, yeah, they are down bad since it. And I can see why they're down so bad because they're losing a lot of money and the revenue's, super negative year over year. But they have a good balance sheet, so they can afford it for a while. Moderna is ditching vaccines. I think it's because of the current administration. Oh, okay, Bandit. Yeah, makes sense. So Bandit actually said, Novo Nordisk, this is your weight loss play. This is the company that owns Ozempic and Wegovy. That's all their business pretty much. 93% of the revenue is their diabetes and obesity care products. That's why I call this a basically pure weight loss play because it's Ozempic and Wegovy. Novo Nordisk, oral Wegovy sees strong market adoption. So what was cool is, big competitor to Eli Lilly. Eli Lilly is a big competitor to Novo Nordisk as well. Achieves record-breaking launch with 500% subscription surge. So yeah, they actually launched Wegovy pills on Amazon, and I went on Amazon and checked; they're really there. So yeah, they Novo Nordisk launches marketing campaign to differentiate Ozempic from competitors, expands partnerships. So yeah, anyway, they're putting their Wegovy pills on Amazon. It's been great, but if we're wondering why has the stock done so bad, it's because of their earnings reports, and they've agreed to lower their prices a lot on Ozempic. Like now, Ozempic is actually in Medicare and Medicaid at like a low, I don't know, I'm going to just make something up. It's like $200 a month when before that it would be like $500 a month. But because of they've agreed to basically lower the prices a bunch. So if we go to their revenue this quarter, analysts expected 12.1. They did 11.8, so they missed on revenue by a big chunk. But even though that, they still grew revenue 10%. So revenue's up 10%, but here's the bad news. Here's where the price cuts come in. Revenue's up 10%, but the net income is down by 22%. And that's not some one-time adjustment either. Like the operating profit really is down 26%. So that means the net margin went from a 38% net margin to a 26% net margin. That is a real contraction to the net margin. Which is something to watch. And there's just a lot of new. That's why I think the multiple has just gone down. 18 PE. They used to be at a freaking 40, 50 PE when Ozempic was really first popular. Now it's at an 18 forward PE. I think that collapse in multiple has come from a few different things. Increased competition from Zepbound, which is Eli Lilly's prescription. And they actually lose, this is really bad news. They lose their exclusivity, their patents on Ozempic. They lose it for in Europe in 2028. They lose it for China in 2030. And I think for the US, it's 2028 as well. So, but they still have Wegovy. It's a mixed bag. It's a dilemma there. So I wouldn't buy it at current prices, but it's certainly one to watch. Uh-oh. Hopefully my Wi-Fi didn't just cut out. It says the Wi-Fi just tanked on me. Oh no, it's totally fine back. Okay. Sorry if it glitched out for a second there. We are completely back. Sorry if it lagged for a sec. Adobe, please. Do you have a Roth IRA? I do have a Roth IRA. I'll give you a quick glance at it if you want to see. It's really kind of not too great. We just got 5 stocks in our Roth IRA. We're trying to bring the growth back. We started it almost exactly a year ago, and we're only up 1%. 1% all time. I love being fully transparent. You want to see any of my portfolios? I'll show you my all-time return, lifetime return on every stock. I have multiple different portfolios here, like my Webull portfolio. We're only up like 15% all time in here. I think the software names are getting hurt, like Path, Reddit, Dave today. Okay. You lose the patent in 2028. Yeah, hey, sorry if the stream cut out. Yeah, that's another thing to watch on Novo Nordisk is their patent expiration, 2028 in Europe and 2030 in China for Ozempic. But they still have Wegovy. So ASML earnings tonight. Really? I think that's tomorrow. Let me double check that. So Wednesday, the 28th. Today's the 27th. Yeah, today's the 27th. So tomorrow's the big day. Tomorrow we get Microsoft, Meta, Tesla, and I think ASML is tomorrow. Yeah, so ASML is tomorrow. Might be before market, though. I don't know. IBM's tomorrow, Lam Research, Starbucks, ServiceNow, Waste Management, Corning is pre-market, United Rentals, a lot of cool names. MSCI, someone's been saying MSCI, they report tomorrow as well. They're like an ETF manager. Wow, Comfort Systems is up 3%. No way. Oh my goodness. Okay. What do we want to look at next? Adobe, please. Let me go ahead and do Adobe here. BMI, Badger Meter, MSI are good under the... let's do MSI too. I want to get to MSI and MSCI Hey, Plasma, what's up, Plasma? Good to see you, brother. And Greed, good to see y'all. So here's Adobe right here. This one's another one being hurt by the AI thesis. So Adobe, I'm on an Adobe product every day. I'm on Photoshop, for my YouTube channel and stuff. But they're saying in 10 years from now, will we need Photoshop as much, or will we need Photoshop at all? Maybe our LLMs are so good, like you can Chat GPT generate a logo, Chat GPT generate a thumbnail, whatever. So, but I'm always a believer that humans are always going to need like the final touch on art, but it still will have a impact on their business. So they're very cheap because of that. That's what's really compressing the multiple because they're beating on every metric every quarter, but it's the sentiment. So that's why the forward PE is a 16 on Adobe, kind of on the top right there. Because if we go to the expectations, they beat on revenue, they beat on EPS, they beat on EBIT every quarter, and the expectations are still up and to the right. So that's actually what I like about Adobe. Like I wouldn't fully dismiss Adobe as a can't buy this stock. Like if I bought this one, I'd keep the allocation super low. I'd keep it low. I'd nibble on it. Almost like a hedge to Adobe would be Microsoft or Google with their LLMs. But they make 1.8 billion of after-tax net income a quarter. So they're making 1.8 billion in net income a quarter, a 2 to 3 billion of free cash flow a quarter. So if you're wondering what does Adobe do with all that money since they don't pay a dividend? Well, what I love what Adobe's doing now is share buybacks. They've been spending 2 to 3 billion dollars a quarter buying back their own stock. Unfortunately, those buybacks have been poorly timed because it's at a new 52-week low today, but they've bought back legit 7% of the entire company this year. So that's how the net income is up by 10, but the net income per share is up by 17.5 because they bought back 7.5% of all the shares the past year. So they're buying back like 7 to 10% of the stock a year at this, 16 PE. I honestly believe Adobe should like buy a company. That's kind of what PayPal's doing right now. Like they need to out innovate out of this whole buy some sort of company. I don't know what, but or take a stake into something. But I'd keep the allocation to them very low. Um, are you holding Micron or GLW? No, I do not own either of those companies, but I basically own the bigger version of GLW, which moves nearly identical with Corning, before today. But Corning sent Amphenol stock to an all-time high of 4%. But yeah, this is my Corning play. What website or what app? Hey, yeah, this is a brokerage right here where you buy stocks on. If you wanted to get this app I'm on, it's actually in the link tree in my bio, that very first link there. So let me get to MSI really quick. Oh, and thank you, Luffy. I want to get to Race, why I like Race. I don't love Race. I like them, though, as a small position. But I'll show you why. So here's Motorola Solutions. So a lot of people know Motorola, like that, the phone company, but look at their stock price. They've been one of like the best perform. Like here's the 2019 or COVID dip right here. Like they have done phenomenal, and that's because they've really gotten to like the government space where they sell like government walkie-talkies and government cloud products. So they're actually at a 30 forward PE. So they're no longer selling smartphones. I don't really think. So they're at a 30 forward PE, products and system integration. So they sell these products. We're about to look at the software business, but the products revenue is up 6% after 10%, after 12%. So growth is slowing down there a little bit. But when we go over here to their software business, software and services, it's at a new record, up 10% year over year. So the growth over here is quite nice. And that's a higher margin business. So if we go to Motorola, they have a 20%, 18, 20% net margin. So they're literally making in net income a quarter, 400 to 600 million of real after-tax net income a quarter. So that's kind of crazy. Motorola is making 500 million a quarter, and you get a 1% plus dividend. You buy them right now, you get 1% dividend. They raise it every year. It's probably a little expensive at a 31 forward PE, but they have that growth. That's like surprising. I want to deep dive more into what their actual products are, but I know they're in like government solutions, kind of like contracts or software. So maybe we can go to their website real quickly. Here's their Motorola. We don't want to look through there. But anyway, Motorola is kind of nichey and cool. I agree. So let me do Race right here. So yeah, Luffy, what's up, man? I've been dollar cost averaging into Race. I've been buying like 0.1 fractional shares. I like Race because of their earnings, but even though Race or Ferrari is at this new 52-week low level, it's not a steal of a deal. Is Moomoo a good app? Yeah, I think so. Yeah, if you want to get this app with my affiliate link, link tree in bio, first link there, my favorite app called Moomoo. I have all these apps linked up there if you wanted to get Webull or Robinhood too. They're all brokerages, but yeah, Moomoo's my favorite out of all them for the analysis tools. So here's Ferrari right here. They're at a new 52-week low pretty much right now. And if we look at the valuation, on the right, they're at a 30 forward PE. Like even at this new 52-week low, they're at a 30 forward PE. So it's not super cheap, but I just like them for their quality. Like their pricing power. Like here's this quarter, they beat on revenue, beat on EPS, beat on EBIT, which was good. They have like a backlog into 2026 of car orders. They have a 21% net margin. Like any other car company has super low single digit margins and most of the time negative margins. Tesla's lucky to have a 5% net margin. Ford's lucky to have a 5% net margin. But Race has a 21% net margin. So if we go to the bottom line, like this is in US dollars. They're a European company, but we converted it to US dollars. Like they literally make, as well as like kind of like Motorola, 400 to 500 million of real after-tax net income a quarter. And you get a dividend. You get an over 1% dividend yield with Race, 28% payout ratio. Like if tariffs hurt Ferrari and they have to raise prices on their cars by something small, like $10,000 for their consumer, like their customers are the kind of consumers to pay it. So I believe Ferrari is kind of like a pricing power play, just like their consumers, like the people buying Ferraris aren't going into a recession the same way that maybe everyone else in the economy is. So I don't know. They just seem good, to a good place to park cash right now. I'm buying a little bit more, but as much as I love Ferrari, especially in this kind of environment, you don't want to make them as a big position. That's why they're only, a $1,200 position for me. I don't want them as a huge major size position just because of the environment we're in, and they're not a super cheap valuation, but I still like them. Sure. Hey, what up, Rawl? And Greed said CIFR. Forgot to get to this one. That's my fault there. And I want to get to Duolingo too. Uh, er, don't forget to remind me, please. So Cypher Mining, I think this is a silver gold play. Let me double check here. No, it's in the crypto markets. So operates as a Bitcoin mining ecosystem in the US. So Cypher Mining. So yeah, 100% of the revenue is Bitcoin mining right now. So I wonder, you really value these off the net asset value of their crypto. So that's sort of weird. Look at this. So their balance sheet, used to look great, but then this quarter, the liabilities kind of spiked up. I wonder what happened there. We can see it right here. They issued 1.2 billion of debt. So I wonder if they're about to do some sort of acquisition. I don't know. They have been missing on their expectations. This one actually looks very similar to like a CoreWeave or what's that called? An Iris Energy, where this company might be converting some of their, their GPU capacity to cloud compute instead of just Bitcoin mining. Maybe we could ask AI here. It always takes a minute. NAV of their Bitcoin. We can ask it. What is the net asset value of the Bitcoin? So we'll look at their market cap first off. So the whole company is worth $6.9 billion. So that's kind of how I like to value these, is do it off the market cap. So just for fun here. Wait, can we pull up the previous? Oh, it's not going to let me because I'm streaming here. Oh, yeah, we're going to be able to. Oh, it's still going. Uh-oh. Well, we'll come back to that in a minute, I guess. I just wanted to see for fun if it would generate it kind of quickly. I guess it doesn't want to. Okay, here we go. It's loaded it. They're holding 1,493 Bitcoin. The inventory was reported as $170 million, and the Bitcoin was at 87,000. Cypher Mining produced 689 Bitcoin. The company reported all-in electricity cost of $34,000 per Bitcoin. So you can basically mine the Bitcoin, one Bitcoin for $34,000, and it's worth, 85,000. Anywho, hopefully that was somewhat helpful there. Oh my goodness. Yo, shout out to the legend Maddie or Label Brand on the YouTube stream with the 25 RON donation. Yo, I really appreciate you, my brother. He says, get any idea of when SpaceX will go public and get a coffee? Thanks, dude. Yeah, SpaceX is actually supposed to go public, I think, like probably the end half of this year. And what's really cool is I never knew this, but I looked it up and it's true. Google owns, like after all the dilution, Google owns 7.5% of SpaceX right now. And their original investment, like they only, I don't know the exact numbers, but they're up over 10x on their original investment in SpaceX. So if SpaceX goes public at 1.6 trillion market cap, Google owns 7.5% of 1.7 trillion. It's kind of a cool. That's Google's exposure to like the aerospace industry. What app are you using to get this information? Yeah, hey, this is really, it's a brokerage where you buy stocks on. They ask for a bunch of information tax stuff. If you want to get this brokerage, it's free, costs nothing. It's in the link tree in my bio, very first link there. Broker called Moomoo. What's the company name? I forgot what company we were looking at there. CIFR. Oh, that was CIFR Mining. Yeah, hey, if you missed anything, by the way, also I'm streaming on YouTube. You can like rewind it. That's the best way to support me, by the way. I'm trying to build up my YouTube channel. It's called Nathan Roberts. Also in the link tree in my bio. You can just type into YouTube Nathan Robert. You can like rewind it. So, all right. Thanks again, Label, for the crazy gift. And Trap King and Chris, I forgot about y'all. He says, yeah, CPRT and ASML. Let me do ASML first because they report earnings tomorrow. Wow. They're already at an all-time high. This is the lithography play. So what that means is they literally make the technology. They are the chip making manufacturer. So the literal devices that make the GPUs, ASML makes those. And they have so many patents in demand over this. Like it's crazy. Their backlog. To ship one of their machines, it takes 3 airplanes, like Boeing 747s. They're expensive though. They have only 3 customers. I think their only 3 customers are Taiwan Semiconductor, Intel, and Samsung. Those are like their only customers. But are their 3 main customers. They're expensive at a 45 forward PE. They're really expensive. But the Chinese were literally trying to steal ASML's technology and steal their machines, where the U.S. Government came in and helped out this European company. And now China's not allowed to buy their stuff. So yeah, if we'll convert their currency to US dollars, they make great money easily. And this is in US dollars, 2.8 to 3 billion plus of net income a quarter after tax. Crazy. And they pay a dividend. What's cool is the dividend kind of changes every quarter. So you never know what you're going to get. $1.86, $1.84, $2, $1.57. So changes every quarter. I wouldn't be buying ASML at current prices, especially because they're about to report earnings tomorrow. So it's kind of like you're betting into earnings if you buy now. But I'm real excited to see what happens. Whoa, they're expecting $8.90 of EPS next quarter, then $7.50. So there really is like another 30-40% EPS growth expected for 2026. I wonder if they're also kind of benefiting from the memory shortage. Interesting there. Cool. That's ASML there. CPRT. Then we'll get to COP. I've been holding on to stocks for a while. Your thoughts on it? Yeah, wait. You want me to look at COP stock, right? That's the oil company. Oh, and Duolingo. I keep forgetting. We got to get to Duolingo and Redwire. We got to get to all these names here. We're going to be live for another like 30 minutes, so don't worry. We'll get to all these. So Copart. Yeah, if you wanted to follow button, we stream every day. I appreciate everyone who's here. If you wanted to follow button. I saw nothing. Watch out for people impersonating me. We're ready to kick out a few people who have the exact same username and profile picture as me, trying to impersonate me. Just know I'll never follow you, DM you. I sell literally nothing. I have no course book, WhatsApp. I don't coach. Literally sell absolutely nothing. Only thing I have is a YouTube channel if you want to watch a stream from there. I'd appreciate that. But here's Copart, because TikTok keeps giving me issues. They keep removing my stream from For You page eligibility and stuff. So anyway, Copart, $40 billion company. Let's analyze this stock right here. $40 billion market cap, and they're cheap. Look at that, a 23 forward PE. So they've gapped down massively since their earnings reports. So let's see what happened there. So the revenue is, so it's single digit. Oh, the growth has slowed down. Maybe that's why. So the revenue is only up 0.7% year over year. That doesn't beat inflation. So revenue is up 0.7, but the net income is up by 11. So this is the best part about Copart. They're making $400 million in net income a quarter. And that really does put them at a 24 forward PE. But I think the reason they're at this kind of low PE is because investors are questioning the growth. Yeah, look, for the past 3 quarters in a row, they missed on their top line revenue. So they missed on their sales, the lifeblood of the company, the revenue. They missed on it for the past 3 quarters in a row. So maybe that's why the stock is kind of struggling at this lower multiple, because the growth is gone. That's just my guess. But the bottom line still there, like even there, they're still making $400 million net income a quarter. Like, oh my goodness. And I'm glad I scrolled down. Another like huge safety net is this fortress balance sheet. The fact that they have no debt at all. That's insane. 5.4 or 5.3 billion of cash and no debt at all. So they could do an acquisition, they could buy back shares. So $5 billion in net cash, and the whole company's worth $40 billion. So over 10% of the market cap of what you're paying is just their net cash on hand. So there's actually a lot to like here. You want to watch the top line growth. Pretty interesting. COP stock, and then we'll get to Duolingo after this, because I've been wanting to get to Duolingo for a while. My apologies there, Zhang. If you're still here, I appreciate your patience. I'm sorry. So here's ConocoPhillips. This is an oil and gas play. This is a nice way to diversify into oil, but just know ExxonMobil looks the same way, where they're like barely above where they were in like 2008. Like the oil and gas stocks never outperform the tech-heavy S&P 500. So you're not buying this in expectations to outperform the tech-heavy S&P. You're buying this for the diversification into oil and for the dividend yield. So it's a commodity play, but whenever there's war fears, inflation fears, whatever, the Venezuela news, oil goes up on those random sets of news. And while you're waiting for those sets of news, you can just collect a 3% qualified dividend yield in the meantime that raises every year. So yeah, 20 PE. I think they just bought Marathon Oil. Or I think they're trying to merge with them or something, or maybe that's a different company. But anywho, yeah, nice way to get exposure to oil. And it's not just them that's kind of struggling. If we just look at like a Chevron too, Chevron's also kind of been flat from a while back, So yeah, my favorite oil and gas play, it's a bit of a lower yielder one, is MUSA, Murphy USA. Actually, I want to buy more because I only have 4 shares this one. I kind of want to make that one a bigger position in my portfolio. So let's check out Duolingo. The AI, the company getting really hurt by the AI thesis. So the reason the multiple is collapsing here is because people are realizing, hey, if you don't know what Duolingo is, it's an app you download to learn a language. You basically pay them a subscription every month to learn a new language. And maybe in the 10 years from now, the future of the world might be you don't actually ever need to learn a new language. The AI translation live technology is so good in the new, I'm talking in the future here, like maybe the Meta Ray-Bans glasses technology is so good, the technology is only getting better from here, that the live translation is already pretty good, but it only get better. So maybe there's no need to learn a new language. And there's also some new language learning competitor apps. Like the day Duolingo dropped, that they're having a language learning app as well. The stock fell 10%, but it's then recovered. But even on this 52-week low level, even though Duolingo is at this new 52-week low level, it's not insanely cheap because the forward PE is a 32. You don't look at the current PE, it says an 18 current PE. They had a total one-time adjustment. It says they made $5.95 of EPS. They didn't actually, the analysts expected 76 cents. They didn't actually do $6, but that's why you don't look at the current PE. The forward PE is at 33, which isn't insanely cheap. It could potentially fall to maybe like a 28. Like I sadly think Duolingo could maybe go to like a 28 forward PE, but I don't want to completely fully dismiss Duolingo because their numbers are so impressive. I'm talking so impressive. If we go to their subscription model right here, which is 85% of the business, I love subscription model companies. It's all recurring revenue. It's up 45% like every quarter. If we just look at the middle, all the year-over-year growth rates, it's just always at a new record every quarter. It's up 45% after 48, after 45, after 49, after 53. It just hits a new record every year, every quarter. And if you don't pay for their subscription, you see advertisements, and their advertising revenue is up 45% to a new record as well. So it's not like the stock's falling because they're missing on expectations. No, every quarter they beat on revenue, beat on EPS, beat on EBITDA, but it's the sentiment around their actual, the thesis, the moat around Duolingo. People are starting to lose faith in them. But fundamentals always outshine in the long run. I don't think they're going to get hurt probably as bad as people think. And I think it's not worth going crazy into Duolingo yet. Like if you want to Duolingo as 5% of your portfolio, you don't make it 5% today. But you maybe make it like 1%. You start the nibble. I don't see it falling much more than 15 to 20% more to like a 28 forward PE. That would be my like bottom, like time to really load the boat, make it the full 5%. But yeah, that was an interesting play because the numbers are still so great there. I actually, that's why I still have interest in them because the numbers are so good. They're implementing AI in their app. Oh, cool. Yeah, hey, what's up, Luffy? Yeah, my phone battery's struggling a little. Hey, someone said, new follower here. Can I get your opinion on UNH, a potential buy? I just avoid this industry. It's just so in the government's hands. Like the stock fell, I think if we go to like I really have to pull this up on Webull. So they fell a bunch before they even reported earnings because of the government. So if we go to the overnight market here, so yeah, look at this. The stock went from 352 all the way down to 315, not because they reported earnings, but because the government didn't allow them to raise prices by 5%. They kept the price of their Medicaid rate the same, so they can't raise prices. So the stock fell 10% before that. And then they reported earnings this morning, and it just fell even more. And it was a huge miss on their net income. I'm talking their margins are near zero now. And they can't pay a dividend with their margins at zero. So they're really sadly to say, deserve to fall 19%. And I'm just not too interested in this industry, so I'm staying away. It's just such in the government's hands. Maybe in a new administration, this will get fixed. And it's really a long-term play. If you buy it, you got to have some diamond hands ready to hold for many, many years. And it's just not a growth story. The sentiment's just too far down. I'm just avoiding the dip. Sadly, I'd rather buy the story on Duolingo right now than UNH. I think UNH, because of that, their forward PE might be like it's really going to get crushed, because this quarter they were expecting or we can just look at it on EBIT. They're expecting 3.3 billion of profits. They only did 380 million of profits. So the EPS was 1 cent. They expected $1.70. They had 1 cent of EPS. So this is the margin collapse story we're seeing here. The revenue's up 12. So the revenue's growing. Revenue's up 12, but the net income is down by 59. And it really is down by 50. So it's the margin compression here. Gross margins are now by 20 after it fell 10. Net margins are at a 0. And this doesn't even include the most recent quarter. This is Q3. Well, the Q4, which they reported this morning, is even worse at a 0% margin. So I can totally see why UNH is struggling. Warren Buffett bought them, though. Well, last quarter, Warren Buffett bought the dip on them, but super small size position there. It's actually hurting my HCA Healthcare. HCA Healthcare said because for that same reason, they actually cut their profit guidance for the full year 2026. They cut their profit guidance by 500 million because of that. But this stock, they reported the same time as UNH. If I wanted a healthcare play, I would look at HCA Healthcare. So they've done really good. They announced a $10 billion buyback plan, which is over 10% of the market cap. They beat the EPS. So I'm surprised. UNH is sitting this one down. This one will be up. I legit think like 15, 20% if UNH did not fall 20% today. Yikes. Okay, hopefully that was somewhat helpful there. I wouldn't go crazy in UNH. I'd be real careful there. General Motors having a good day. Hey, what's the ticker symbol for General Motors? MEELI or Mercado Libre. This is like an international Amazon play. Sorry if I'm a little behind here. Yeah, I want to get to AppLovin. I want to get to Visa too. These are good ones. Visa's a steal. I think Visa's at a 25 forward PE. So this app is telling me on Mercado Libre that there's a little bullish continuation triangle for the technical people out there. What's the forward multiple? So a 46 forward PE. So they're expensive at a 46 forward PE, but they deserve that forward PE because of how high their growth is. So yeah, they're in e-commerce services, financial services, credit revenues, fintech product sales. So if we go to their bottom line right here, this is good. They make 400 to 700 mil of net income a quarter. And they had a little adjustment. It was actually higher than 420 mil this quarter, but it was great. Here's where so it's South America, basically South American Amazon. So check this out. 55% of the revenue comes from Brazil. So, Brazil, Mexico is 75% of the total revenue. Then Argentina's at 18. So it's really, you notice the US, Canada, they're not on there. So it's really, if you're bullish on these countries, these international markets, it's a good way to get exposure to those markets. And they're already really profitable. So, wow, the top line growth is so good. It's up 40 after 35, after 35, after 42. Like they're on a just streak of growth, investing a lot into the future. So I really like MELI. But the valuation at today's price isn't amazing, but they deserve a high multiple. CVS down a ton too. Yeah, all the healthcare stocks are. If we go to the top here on my watch list. So Yeah, United, oopsie, there we go. United Healthcare is down 19, CVS 14, EOV, all the Medicare, Medicaid prone stocks, which are those three, are all down. And some of the software stocks like Pinterest, Reddit, Life 360. Okay, what are your thoughts on App? Let me do App Loving because this is really a stock I think everyone should put on their watch list now, financial advice, because they have one of the best like fundamentals I've ever analyzed for a stock. It really is so good. Um, AppLovin denies money laundering allegations from short sellers. So yeah, one thing, there's like the short thesis on them right now. Who knows? What's the short interest? Okay, so only 4.6% of the shares are being shorted, not that much. So I'm a fan of just buying shares of AppLovin. So I don't own any AppLovin, but here's why they're so great. If you look at the revenue this quarter, the revenue's up 68% to 1.4 billion. But here's the thing. Out of this 1.4 bill of revenue, they netted after tax 835 mil. You know, the before tax number was 1 billion, the after tax was 835 mil. So that means their net margin is a 59%. That's a higher net margin than Nvidia. So this margin expansion is the real winner. Like these year-over-year growth rates at the bottom on their net margin is so impressive. Like they already 40% net margins were so impressive, but 60 is insane. And you know, not just 800 mil in net income. If we go to the FCF, which is free cash flow, they did $1 billion of free cash flow. And at this growth rate, what's it going to be the same time next year? You know, they're going to be doing $4 billion of free cash flow and net income a year. Ooh, but they are worth 183 billion. So that makes them at like a 2.5% earnings yield, forward earnings yield. What's the forward PE they say? 40 forward PE, but they're having their this year's 35, 40% growth. So you really got to do a 2-3 year multiple on it. I wonder what the PEG, price to earnings growth ratio is, but you kind of calculate your own growth rate there. But yeah, it's supposed to go, whoa. The EPS was a record this quarter. It's never been over $2.45 before, and it's supposed to go to $3.15. That's easily over $1 billion. So actually, the forward PE is probably lower than a 40. I just love the growth on this one. It's an advertising stock. You know, SEC's investigating them because their ads are so good. But I wouldn't go crazy in the stock because they are a bit pricey. Hey, Remco, are you still here? Let me know if you want me to get to HEI. That's my bad. I missed that one. HEI, I think that's like Heiko. I think Buffett bought them. Eric said, hope everyone is good. What's up, man? He says, thoughts on cost. I think, Costco. Yeah, this is a great, just like, never sell stock. I mean, good business model, easy to understand. It's always the boring stocks that do good, you know, like Waste Management or Costco. You know, it's a simple business model. You pay a subscription to get into their store, whether you go to the store or not, they're collecting that monthly subscription revenue. And you enjoy going there because they sell stuff in bulk, so you get a good deal. You know, they got the lost leaders like the $1.50 hot dog and rotisserie chicken, all that. So they're expensive, though. That's the tough part about Costco, which I just can't pay. Sadly, I wish I could, but I just can't pay a 46 forward PE on Costco. I mean, that Costco's more expensive than AppLovin, and I think AppLovin's going to grow more. But it's just such a safe business model that's going nowhere. It's almost like recession resilient too. They make like easily over $2 billion in net income a quarter. They sometimes do special dividends, a little bit of share buybacks, but yeah, everyone loves going to a Costco. It's like a vibe every time I go in there, but I just can't pay that valuation. But it's such a quality stock, really is. Um. Oh, hey, shout out to the member Louise. Did you see Michael Burring going long on GameStop? Really, I did not know that. You know, I don't really pay attention to what Michael Burry does. Yeah, I remember he sold out of all of his stocks and then he only owned Geo. Then he bought a bunch of stocks. Then he sold all of his stocks and only owned Estate Lauder. And now he's in some other name. Anyway, someone said AMAT, shout out, or who said that? John said AMAT. They're at a new all-time high today. Congratulations if you own this one. They're up 5%. Is there any like specific news? Um, Reaffirms buy. No, just some analyst stuff. Well, let's go judge them off their financials. So yeah, obviously they're in the semiconductor industry and the semiconductor stocks have been booming. Congrats if you're in anything semiconductor. 35 forward PE. You know, I certainly wouldn't buy it today, but 35 PE isn't crazy expensive. Let's see what their bottom line is. Yeah, they make easily 1 to 2. Yeah, that must have been a one-time adjustment. It was. They're making 1 to 2 billion of, net income a quarter, and you get a 0.5% yield. That's a nice dividend growth CAGR there, 20% payout ratio. But the 35 forward PE is a little expensive. They beat great on earnings. They expected $2.06, and that's what they expected. They reported $2.38, and they beat on revenue, beat on EPS, beat on EBIT for the past 3 quarters in a row. So they really are beating on the fundamentals that analysts are expecting. That's why they deserve to go up. Sagittarius said STX. I think that's another memory shortage play. Yeah, this is Seagate Technology. Another, like, it's like a mini Micron. So let's see right here. AI demand drives HDD market recovery, benefiting Seagate. So let's see what the forward PE is. So they're worth $80 billion now. And if you look at their current PE, they're expensive at a 48, but the forward PE is a 29. So a lot of EPS growth expected. And, the memory shortage is kind of only getting worse right now. So they might even beat on these EPS numbers. Yeah, like, look, they expected $2 this quarter. They did $2.43. That's like a 15% beat. So if they beat 15% on this, the forward PE is like a 23 potentially. And that's why, even though the stock is at an all-time high and looks technically overbought, I could see it going up another 10%, 15%, not too easily, or pretty easily. And I wouldn't buy it, certainly today, its current prices. If we get some weird thing that fixes the memory shortage all of a sudden, that wouldn't be good. But, actually, Micron's cheaper. Micron might be a safer play. But anyway, those are your, like, pure memory shortage beneficiary plays. And that's what's really led to the growth on SMH. Like, NVIDIA's been flat. Like, NVIDIA's been flat since this day right here, since July. But this ETF, which owns all the semiconductor names, have been pushed up higher because of all the memory shortage names. So this SMH ETF has been going insane. Micron's now 6% of this when it used to be like 1% of it. Should we look at Micron too? Should we look at GM? Let's do GM real quick. Ooh, Oracle or PayPal? Ooh, you know what? We'll do PayPal after this too. Yeah, dang, look at that. General Motors up 9% on the day. It says at the top here, GM lost billions on EVs, still beat Wall Street expectations. Well, that's great. So they must have reported earnings. Reported a Q4 loss, announces a dividend and $6 billion buyback. GM projects 1 to 1.5 billion EV loss improvement. So that's great news. General Motors reports full year profitability in China. So that's good news, I guess. So $78 billion car company here. Yeah, if you look at the right, the forward PE, they're at a 7.7. That's because they lost net income. It must have been they lost 3.3 billion in net income. Oh, they really did. Maybe it was. Okay, well, anyway, the forward PE says a 7.7. So they're potentially trading at only 8 times PE, which makes sense for kind of a low margin car business. Like if you go to their net margin right here, it's lucky to be a 6 to 7% net margin, and recently it's been kind of lower, 2% last quarter, 4%. So, but they really did beat on expectations this quarter. That's actually why I like Ferrari as well. Ferrari sells cars as well, but they sell their cars for a 20+% net margin. It's like a whole different ballpark. What app is this? Looks cool. Yeah, hey, this is a brokerage where you buy stocks on. If you wanted to get this app, or I have an affiliate link, it's actually in the link tree in my bio, very first link there. If you go and like deposit $100, we'll both get like some free stocks. But you can just type it into Google, brokerage called Moomoo. First link in the link tree in my bio. Just do PayPal real quickly. PYPL. Hey, Louise, did you want me to look at GameStop? If you have a stock you may look at, Louise, let me know. I got you. So unfortunately for PayPal, they're the same price as they were like 10 years ago. Like PayPal's the same price that it was back in 2017. But it's not just a PayPal problem, because that kind of PayPal problem. But it's not just a Venmo problem. It's also Cash App. Here is Cash App stock publicly traded. They're the same prices they were back in 2018 as well. So it's not just PayPal struggling. The company that owns Cash App, is also the stocks look identical almost. I think they're just kind of being out innovated. It's kind of a commodity, like sending money from one place to another is kind of what PayPal does. Send money to your friends, on Venmo or getting paid for something, but the fees on that should just only go down in the future for just like sending people money and stuff. I used to get paid every month through PayPal, but then I just I paid crazy fees to PayPal every month, but then I converted it to go straight to my bank, and now I pay no fees. It's incredible. I'm like, why did I do this before? But PayPal partners to offer free tax filing for debit card users. PayPal acquires Israeli AI commerce platform to strengthen agentic commerce ecosystem. So that's good. I like that PayPal is trying to out innovate right now. I know there's a lot of controversy around their Honey Chrome extension, but they're at a 10 forward PE. They're like this commodity multiple, 10 forward PE. They're not expected to like create or lose you any money. They make, this is the good news though. They make over $1 billion in net income a quarter. 1.1 to 1.2 billion in net income a quarter. And then what is PayPal doing with that right now? Well, the cool part is the buybacks. They're spending 1.5 billion a quarter solely buying back their own stock. Unfortunately, those buybacks, kind of poorly timed because it's at a new like all-time low today, but our 52-week low today. But still, they've bought back. Let's see. Here's how you tell. The net income's up by 23 or 24. But the net income per share is up by 31 because the share part of the ratio went down. Again, the net income growth rate and the EPS growth rate should always be the exact same, but the shares went down, so the EPS grows more. So they've been beating on those expectations. So yeah, honestly, the risk reward probably isn't too terrible on PayPal. I just keep the allocation to that one super low because, you don't know what the thesis and the moat is around PayPal. Maybe they're just being out innovated. I don't know. Yeah, they said PayPal data says they have a narrow moat. So, all right. Let's look at some more here. Micron, yeah, let's do Micron. All right, let's do it. MU stock. So Micron, another memory shortage play at an all-time high. So congrats if you own this stock. Another one where I think even though they're at an all-time high and they're on a technical analysis really overbought, the valuation, isn't nuts. If on the right here, they're at a 10 forward PE. I just have a feeling like Micron I really feel like could stretch up to like a 13 forward PE. That's a 30% increase from today's price. Like that's why if I was a shareholder of Micron, I certainly wouldn't be selling or trimming my Micron shares because the expectations are so phenomenal. The EPS this quarter was $4.60. It's supposed to be $8 next quarter and then $9 the next quarter. You annualize that, that's $40 of EPS. It's a $400 stock. So that's how they get the 10 forward PE. It really is true. And the shortage isn't going anywhere anytime soon. Check out the second line here. AI-driven memory demand creates global shortage expected to persist through 2027, benefiting Micron. And they have like a huge backlog of orders as well. So it's pretty insane. Micron invests $24 billion in new memory chip manufacturing facility in Singapore. Oh, that's interesting. Micron to acquire Taiwan fabrication site for $1.8 billion to expand RAM production. And Micron announces plans for the U.S.'s largest semiconductor facility in New York, expected to create 50,000 jobs. So they just have unprecedented demand. It's real impressive there. So. Look at the news on HCA. That's why they jumped. Yeah, HCA Healthcare reported earnings today. They're falling a little bit because of like UNH is sending this one down a little bit. They said they have a $500 million next year net income impact because of the Medicaid not going up. But I think this was the most recent quarter. Yeah, this was the most. It's already loaded down here. All right, let's see what it was. So check this out. The revenue grew 6.7%. So the revenue's up 6.7%, and the net income is up by 28%. That's insane. So their net margin grew to an 11% net margin. So this is a hospital group. It's one of my favorite stocks ever. They announced a $10 billion share buyback. So they're gonna Oh yeah, look at this. HCA announces $10 billion share buyback program and raises dividend by 8.3%. So they're a very shareholder-friendly company. So check this out. They made an after-tax net income this quarter, $2.16 billion. They're making like $2 billion a quarter. So they're making $2 billion of net income a quarter. They pay a dividend. That dividend only cost $160 million. So they have so much room to raise the dividend. But the best part about the stock is the share buybacks at the top. They spend $2.5 billion a quarter buying back their own shares. That's 10 bill a year. So I have nothing bad to say about this one. And that's like why they're my largest holding in my Roth IRA. I just trust this one so much. They're so shareholder friendly. So I got 5 shares of HCA Healthcare in my Roth IRA. Let's see how the market's doing real quickly. Oh, hey, we're having a little bit of a recovery. We were negative when we started the stream, but now we're actually positive on the day. That's great news. Yeah, look at the spiral right here. Trying to get back to that new intraday high level. Dang, Amphenol's up 4.7. Powell's up 5 now. Fix is up 3. Dude, I, I'm having a great day. Oh, RDW. I wanted to get to that one. RDW. So this is Redwire. I think this is a drone company. I really don't remember. Well, check this out. Redwire selected for Missile Defense Agency contract. Redwire positions for key role in $542 billion Golden Dome missile defense system. So, well, yeah, they got a contract apparently. I think that's why. Dang, they're up 30% on the day. Is there any kind of comments talking about this one? I don't know. But yeah, they got so did Innodata, which was great news. But maybe that's going to really help out their future revenue. They did $100 million of revenue this quarter. That was a record revenue. It was from an acquisition. So if we look down here, that's why their assets, randomly spiked up out of nowhere and went to $1.5 billion of assets because they bought this company down here. But anyway, that missed expectations. They expected 133 mil. They only did 103. So maybe that's why they gapped down on earnings day right here specifically because they missed on earnings. But with this new contract, maybe that changes things and how there's a lot more future growth. So that's in the stock up. Interesting there. All right, let's see here. And Rocket Lab. This is my favorite space stock. Super overvalued, like Palantir type expensive, Palantir type valuation. But Rocket Lab is pretty cool. They're at like a close to all-time high today, up 7%. Let's see if there's any news around this one. Rocket Lab completes 80th Electron mission, deploys satellites for open cosmos. That's kind of interesting there. Rocket Lab reports controlled rupture during neutron rocket testing. All right, well, let's see here. What's cool about this one is they have real growth behind them. If we go to their main business right here, their space systems revenue, it's at 114 mil of revenue this quarter, up 36%. It's never even been 100 million of revenue before today. So they did 114 mil of revenue, record quarter here, great growth there. And then the other part of their business, their launch services, that's up 95% year over year. So both businesses are growing. They also just acquired Geost. So that's another cool thing for like 200 million bucks. They bought Geost. That's why they're deleveraging your balance sheet because of that. The liabilities were 63% of the assets. Now it's only 42. They did dilute you to do that though. So they did dilute you by $1 billion, but that's nothing when the company's worth 46 billion. They did the smart thing because they make no money. They're still losing a lot of money. They're losing 50, 60 mil in net income a quarter. That's what scares me. That's why I wouldn't go crazy in Rocket Lab because they're still losing a lot of money. But as long as they keep up this top line sales growth, 47% year over year growth, they have so many contracts with NASA and JAXA. Like, Rocket Lab's a pretty interesting one. Hey, Mike Murphy, what's up, man? Hope you're having a great day. We'll look at a few more stocks here, then I'm going to go. Dang, we've been streaming for 2 hours now. Yeah, if y'all want to hit the follow button, we stream nearly every day. We just look at y'all stocks. Anthony says, NMAX, is that Newsmax? That's the company that IPO. Dang, ever since their IPO, they've been straight down. Dang, they're only worth $900 million. And they were a $250 stock, and now they're only worth $900 million. So we don't get too much data behind this company because they did just IPO. So that's the bad news. The whole company's worth $900 million, and they lose money every quarter. If they lost $4 million, $75 million, which is 75 or 7.5% of the market cap. So they're not profitable yet, and the growth or the sales are only up 4%. Yeah, it's just a small company. Revenue of 45 mil, losing a couple mil a quarter. Nothing's really blowing me away here. It's some like broadcasting, like Newsmax. Maybe I can go to their website right here. Newsmax Media. I don't know, some sort of news thing. I know like Fox is publicly traded. They've been like just Okay. I don't want to get into that though, politics or anything. Um, okay, let's see here. UNH, I just joined. Okay, we'll probably end it with UNH right here since they've kind of been really popular. They are down 19% on the day, but it's not just their earnings report that made them fall. So if we go right here, here was yesterday before the close. They did not fall because they missed on earnings. They didn't have the earnings report is not out yet. The reason they fell from 350 to 320, uh, basically 10% drop before the earnings was because the government did not allow them to raise prices. The government said you have to keep your prices flat when they were expecting a 5 to 6% increase. So that was the first hit of bad news. And then they reported earnings this morning, and it was really bad. They had no profits left over. So they kind of sadly deserve to be fall. They deserve to fall 19% today. If we go look at their expectations, they missed on revenue, but this was the big miss. They expected $1.70 of net income or EPS, net income per share. They only did a 1 cent of EPS. To kind of put that into numbers, they expected 3.28 billion of profits, and they only did 380 million of profits. So this is a margin collapse story here. So that's Q4. We don't have Q4's numbers, but we can kind of see the trend of this happening before the Q4 numbers. Like here's Q3, the revenue grew 12%. So the revenue's up. The revenue's up 12%, but the net income is down by 59. And that really is real. The profits is really down 50% year over year. So that's a margin collapse story. Gross margins fell 20% after they fell 10%. Net margins are down 60%, only a 2% net margin. In this quarter right here, they had a 0.1% net margin this quarter. So it's really tough, or actually lower than that, because they do over 100 billion of revenue and the profits are like 300 million. And remember, they pay a dividend. Like they at very least need to make 2 billion of net income a quarter just to afford their dividend. And they didn't make 2 billion this quarter, so they couldn't afford the dividend. So that's another kind of unfortunate part. So I'm avoiding this stock and this whole industry. I kind of avoid the whole industry because it's just so in the government's hands. It's not just UNH that's falling because of that rule. CVS is down 13. ELV, which is basically the same thing as UNH, is smaller, is down 13%. So all these healthcare stocks are falling initially because of the government's ruling, and then UNH just had terrible numbers on top of that. So Warren Buffett did buy them last quarter. The reason the stock gapped up on this day specifically was because Warren Buffett bought the stock. But I don't know. I'm not buying this one. If I'm looking for a dip, there's a lot of dips on other stocks that I'd rather buy instead of UNH. So I think it probably could go back up. It probably will go back up, but it's just not one I trust with anything meaningful. I keep it as a very small position because the sentiment is just it's so regulated and the sentiment's just not in their favor. But yeah, the homie Buffett was buying this one. Wonder if his newest position ever was Google this quarter. He bought Google. But let's find where UNH is in his portfolio. Yeah, United Healthcare is only 0.4% of his portfolio. But yeah, Buffett does own them. So yeah, that was the stream. I hope you guys have a great rest of your day. Let me end this with a quick portfolio update, then I'll get out of here. I'll stop annoying y'all. So here is my Robinhood portfolio. It's our dividend-only portfolio where every stock in here pays a dividend. We're up 0.25% on the day. These are all the stocks that we own in here, like Google, Meta, McDonald's, Constellation Energy, United Rentals. Here's our total percent change. So luckily, we are green on every stock in here all time. We're up 1.8% year to date, 12% the past year. How's the SPY doing year to date, actually? SPY is up 1.5% year to date, and they're up 17% the past year. So we've underperformed a little bit. We also have a Roth IRA. Our only stock really green in here today is HCA Healthcare. And here's our total percent change on every stock in here. If it'll load for me. We're down, 30% on CorMedix. That's been our big loser here. We're trying to bring the growth back to our Roth IRA. But then we have our Webull portfolio. This is like our risk-on account. We kind of just do whatever I want in here. We're up in the top left there. We're only up 16% all-time in here, down 1% on the day. But we have some big winners and some losers in here. Like we're up 100% on AMD, just trimmed a little bit of them. SoFi, Robinhood. Some of my biggest regrets are actually selling out of companies. Check this out. We sold 50 shares of Robinhood at $36 a share. And, now it's over $100 a share. So should have just kept all my shares of Robinhood. So yeah, we have a lot of great companies in here. And because of that thesis where I always regret selling a stock after I buy it, that's where I made my Moomoo portfolio, where once I buy a stock in here, I'm never allowed to sell it. So yeah, all these are my diamond hand names in here. I'm just going to buy and hold these for the long run. And we've done so good in here because we didn't take any profits on any of the stocks before today. So yeah, anyway, if you want to support me, I sell nothing. I have no course book, WhatsApp, Telegram, Discord. I don't coach. I literally do nothing. If you want to support me, the only way to is subscribe to my YouTube channel. I'm trying to build up my viewers on there. So yeah, my YouTube channel is called Nathan Roberts. Also in the link tree in my bio. You can just type into YouTube Nathan Robert. You'll find it. You can watch a stream on the replay. It's really fun to watch on the replay. So I think so. Anyway, see you soon. That happened with me to Micron, Palantir, Hood, took profits too early. Exactly, Luffy. That's why some stocks, like Google, HCA Healthcare, you got to just have the intention to never sell them. And no way, I feel so bad. The homie Cruz is in here right as I'm doing my outro. Yo, I apologize. Again, I try and stream every day for 2 hours at least. So I'm sure you'll find me live again. Yeah. Oh my goodness. Yo, Remco. He said HEI. Wait, let me get the Heiko stock because he did want me to look at Heiko. No way, dude. Cruz with the $2.99 super chat. He says, I bought UNH puts. I'm up big. No way, Cruz. You must be up crazy on UNH puts. I mean, holy smokes. Because they're down 20% on the day. And hey, shout out Cruz. He's like a OG viewer. So here is Heiko. Oh, hey, thanks, Sharkwater. Good to see you. I hope you're having a great day. So here's Heiko right here. Warren Buffett does own this company as well. They're a $47 billion company. They're at an all-time high. So congrats if you own this one. You got to be up on your position here. No, you don't have to be sorry you're late. I'm sorry. I gotta go. So this company is expensive. They're at a 61 forward P, but what do they do? Flight Support Group? That sounds really niche. Look at that annual growth. Full year 2025 was a great year. Maybe they have a monopoly on flight support group training. I really don't know what this is. We'll check out their website after this. Maybe they're like an aerospace and defense play. But yeah, if we look at this revenue, it's up 20% year over year. After grew 15, after grew 22. So that's a lot of growth. Double-digit growth, which I'd like to see. And their other business right here, electronic technologies, that's up 14%. So both businesses are booming. And I bet that's beating expectations. Yeah, they beat on revenue for the past 3 quarters in a row, beat on EPS and on EBIT. Yeah, Monkey D. Luffy too. Yeah, Luffy's like a super OG viewer. So yeah, Heiko makes easily 200 mil in net income a quarter. So look at that. The revenue is up 19%. So the revenue's up 19, but the net income is up by 19%. Or no, that didn't low. Sorry. The revenue's up 19, but the net income is up by 35%. So they're actually expanding margins. Net margins up 12% year over year. Gross margins are up, deleveraging the balance sheet. So I can totally understand why people like Heiko. Really low dividend yield, but really low payout ratio as well. Yeah, 61 forward PE, that's tough to pay, but maybe they're just so quality. It's so have such a great balance sheet that it's, hard to, or they always just trade expensive, kind of like a Palantir. Flight Support Group, leader in aerospace aftermarket solutions, specializing in FAA and PMA parts, DER repair. So maybe they have a repair servicing business backed by over 19,000 FAA approvals. There you go. Heiko Repair Group as the leader in independent flight critical repair and overhaul services. Every time there's a little dink in the jet engine, a little dink or something, they gotta restart the whole inspection process. So I know maybe that's a really profitable business. GE Aerospace is another one that's done great. What's up, YouTube agent? And George, hey, he said Zoom stock. Yeah, Zoom, I am down bad on Zoom. Check this out. We are down 38% on Zoom, even after their crazy rally yesterday. So there's this news, and this was crazy. Zoom, a long time ago, no one really realized this, I guess. Zoom owns 0.25% of Anthropic after all the dilution. But their original Anthropic investment, they bought their Anthropic in 2023 and they are up over 10x on their investment. So a good chunk of the market cap, I think it was like a $3 billion stake. So almost 10% of Zoom's market cap, 10% of what you're paying on Zoom is actually straight into Anthropic, from what I'm hearing. And if you look in the top right, the market cap, this is another cool thing about Zoom. Again, Zoom is a low mode business, like calling people like Microsoft Teams and all spaces. Like there's so much like competition for just what Zoom does. But anyway, the numbers are good here. The whole company's worth 27 billion, and they literally have no debt and $8 billion of cash. So a good chunk of the market cap, a good chunk of what you're paying is just their net cash on hand. They have $8 billion of cash, no debt. And that $8 billion of cash earns them interest of 45 mil a quarter, pretty much. So they're making crazy money. They make like 200 to 300 million of net income a quarter. So anywho, that's why the stock rallied up a bunch yesterday. It was on like some Anthropic report of their investment in them. But Brian Paul, UNH tragic. Thank God for stop loss triggers. Mine triggered. No, dude, nice on you. Nice sellout on UNH. Yeah, they tanked today. So very last stock here. Then I'll actually go. We'll look at Sony. So this is your, PlayStation stock. Sony PlayStation, they're being hurt by the memory shortage right now, or the high memory prices, we should call it. They got to sell their stuff at lower margins. So let's see if there's any news around them. Sony formed joint venture. Okay, anyway, I love how diversified their revenue streams are. Obviously the PlayStation sales, which are gaming network, that's 35% of the revenue. Then they're in imaging and sensing, entertainment technology, their music business. They have so many music artists signed to them. It's like insane, the list. And that's growing crazy double digits, So here's their PlayStation sales. PlayStation, they sold 3.9 million. So they sell the PlayStation, but then what's cool is every time you buy a game in PlayStation, like you buy GTA 5 or something, they keep 30% of it. That's why the games, like in person versus on the PS5 store, cost 30% more, because Sony takes a 30% fee, just like Apple does. Recorded music revenue as well. So we get some cool metrics here. So if we just go their bottom line here, they print money, easily making 1.7 to 2.5 billion of real after-tax net income a quarter. And you get a yield here of 0.67% dividend yield, only a 10% payout ratio. So not too shabby on Sony. And the valuation's fair on the right. They're at an 18 forward PE. So there you go. Have a great rest of your day. I'll be live tomorrow for sure. See y'all soon. Thank you to everyone on the YouTube stream. I hope you have a great rest of your day. Thank you for being here. Shout out to Cruz and Maddie and everyone who's still here. Make sure if you haven't already, hit the like button. But thanks again, Cruz, for the crazy super chat, and Maddie and all the members, Brian, Paul. I appreciate everyone. Remco, George, Shar.